Hmm. Okay, hello everyone, guys. Hello everyone. Good evening. How are you all? Good evening, everyone. Good evening, guys. Good evening, Kavita. Good evening, MK. Good evening, Swaminathan. Good evening, Ravi. Good evening, everyone. So, audio, video, everything is clear. First of all, just please tell me about the audio and video of the classes. Everything is working fine, working good for all of you. Hi, guys. Good evening. Acha, tell me now about audio and video of the classes. Everything is good, working fine, everyone. Hello, hello everyone. Audio, video, anyone? Just please confirm once. Okay, everything is good now. Hello everyone. Everything is good. Audio, video. Hi, good evening, Kavita. Good evening. Just please confirm once about the audio and video of the class. Every student, whoever is watching this session. Hi, good evening, Malla. Good evening, everyone. So, audio, video, everything is good. Working fine. No issues. Okay, good evening, Mahendra. First of all, very congratulations to all of you for your such a good result. Okay, everyone. Mahendra, Swaminathan, Malla, Kavita, everyone, Ravi, everyone, congratulations for passing IEIFS examination. So now you all know that second paper is of PPB, right? So you have to prepare for PPB, and this is a capsule batch. So we are going to complete one module in one day, okay? And because you all know that we have total 55 units in the complete PPB, right? And it is not possible to complete the whole syllabus in 4 days, as you all know. Okay, so I will be covering only that portion and that units which are essential for your examination. I am not going to talk anything other than important for your examination side. So I am not going to complete the unit. I'm not going to cover all the units. I am just going to have the most important units with the most important concept for all of you, to just avoid all a last minute hassle. Okay, so you just have to revise with me the most important units. Okay, some units I'm not covering at all. Some units I'm just covering in one page, right? So what is important to you, that is I'm going to cover. And if, for example, today we are going to have a we are going to have module A completely, and you all know that there are total 21 units. Okay, so I'm going to cover the most important unit plus the most important concept related to the question. Second thing, whatever left, for example, if by chance anything important left, okay, so that will be covered by me in the marathon sessions. Okay, so final marathon, if any topic is left or any unit is left by me, okay, so that unit I will be covering in the final marathons questions, right? So you have to attend everything completely. So these four paid lectures, okay, so these four module A, B, C, and D. Then every morning 8 a.m. you have your marathon session, module A, then module B, then module C, then module D, right? Then we have two final marathons, okay, at the last date. Okay, so you have to be there till last. Okay, so by this you will be covering each and everything. Okay, okay, Panchal. Good evening, everyone. Okay, so let's start this session. First of all, let's start with the banker customer relationship. Okay, the most important points related to banker customer relationship is the what are the relationship between bank and customer, like debtor and creditor, or indemnified or indemnifier. Let us discuss this. First of all, if we talk about the bank customer relationship, bank act as a debtor as well as a creditor. Whereas if we talk about the customer act as a debtor as well as the customer act as a creditor. Or in which cases these are, first of all, if we talk about the bank is a debtor and a customer is a creditor, in which case it is the case when a customer deposit its money to bank. Okay, so when a customer depositing its money to bank, right? So now because the customer is depositing money, so bank owes the money of the customer, and that's why in this case bank act as a debtor and customer act as a creditor. Okay, now when the bank is giving loan to the customer, okay, now when bank is giving loan to the customer, in this case, because here see bank is giving loan, so bank act as a creditor, and now in this case customer act as a debtor. So always remember here vice versa is always true. Customer is debtor and creditor both, and bank is debtor and creditor, right? When customer is depositing money to bank, so bank customer is a creditor and bank is a debtor. And when bank is giving loan to the customer, bank is a creditor and a customer is a debtor, right? Next, if we talk about the bank as a trustee. Now, bank as a trustee to whom we can trust, right? So bank act as a trustee if the customer keeps some valuable items or valuable documents or securities to the bank for their safe custody. So for example, I'm just depositing my property papers or my any security paper or my important documents to the bank for the safety of that material. Now in this case, bank is acting as a trustee as well as bank is acting as a bailee also. Now, second very important thing, bailee and bailer concept. Always remember, bailee bailer concept, bank always act as a bailee and customer always act as a bailer, and vice versa is never true. Trustee and the bailee, these are the same condition. When we are depositing as a customer, we are depositing some of our valuable items with the bank for their safe custody, right? So I'm depositing my papers, my securities to the bank for their safe custody because I am giving. So I am a bailer, customer is the bailer, bank is receiving, bank is responsible for the safety, bank act as a trustee as well as bank act as a bailee. Remember this, okay? Next, agent principal relationship. See, agent is the person to whom the principal is giving the instruction. Okay, so agent is always the person who is acting on the instruction of the principal, and the principal is the one who is giving instruction to the agent. For example, I am giving instruction to the bank that please deposit my insurance premium to insurance company yearly, right? Now, in this case, I means customer act as a principal and bank act as an agent. Vice versa is not true. Remember, why vice versa is not true? Because bank always act on the behalf of the customer. So customer is giving instruction, like customer is giving instruction, just deposit my membership fees, just deposited my bills, utility bills, telephone bills, just deposit my insurance premium. So I am giving instruction to the bank, right? So I am principal and bank is acting on my behalf, right? Bank is following my instruction, so bank act as a agent. Vice versa is not true here. Okay, next, lesser lessee. Now please remember this, lesser and lessee and bailer and bailee, do not get confused in it. In bank customer relationship, bank is the what? Bank is the bailer. Okay, sorry, bank is the bailee and customer is the bailer, right? Because customer is giving their deposit or their safety items for the safe custody of that, right? So because customer is giving, so customer is the bailer and bank is the bailee. Now in this case, lessor and lessee, bank is actually giving safe deposit locker to customer for or on a lease, right? For the safety of the customer's valuable item. For example, bank has some locker. Bank is giving that locker to the customer for the safety of the valuable items, right? And customer is depositing their jewelries or precious metals in that safe deposit locker, right? So now in this case, because bank is giving that locker on a lease to the customer, bank is the lessor. Who is giving? Bank is giving. So bank is lesser. Bailer bailee concept, who was giving? Customer was giving. Customer was giving the documents to the bank for the safe custody. So customer was the bailer. In this case, bank is giving. So bank is a lesser and customer is a lessee. Okay. Vice versa is not true. Okay. Indemnifier and indemnified. Now, who is indemnifier and who is indemnified? So, indemnity holder, contact of indemnity, that we have learned a lot. But just I am just giving you an idea. Indemnifier is person who is actually giving promise to the indemnity holder or indemnified person that in any case, if you receive any loss from the third party, your loss will be covered by me, right? So there is indemnifier, okay, and there is indemnity holder, right? So indemnifier, the one who is promising the indemnity holder that if he or she receive any loss from the third party, then this loss is covered up by the indemnifier, right? So the one who is promising, indemnifier. The one to whom the promise is made, it is he or she is known as indemnified or indemnity holder. Okay, now in this case, remember this: when a bank issues a duplicate demand draft, for example, I have some demand draft, okay, I have lost that original demand draft, and I request my bank, just please offer the duplicate demand draft. Now in this case, when the bank is issuing me the duplicate demand draft, bank always make me sign in the contract of indemnity, which states that if that original demand draft is found by anyone else and that person make the misuse of that original demand draft, and due to which bank suffered some loss, so the customer to whom the duplicate demand draft is issued, that customer is responsible for indemnifying the loss of the bank. Once I have made the signature in that contract of indemnity, the bank is issuing me the duplicate demand draft. Right now, in this case, who is giving bank the promise that okay, I will indemnify the loss? Customer. So, customer is the indemnifier, the one who is promising, and bank is the indemnity holder. Bank is the one to whom the promise is made that if you occurred any loss from that original demand draft, if that is found by someone else and bank suffered any loss due to that, the customer is responsible for compensating that loss. And so always remember, customer is the indemnifier and bank is the indemnity holder. And vice versa is not true in this case. Okay, now remember, very important points. First of all, in debtor and creditor, bank act both debtor and creditor, and customer act both debtor and creditor. When the bank is giving money, okay, to the customer as a loan, bank creditor, customer debtor. When customer is depositing money to bank, so customer is a creditor, bank is a debtor. Bailer bailee concept, because customer is giving documents for the safe custody, right? So customer is giving, customer is the bailer and bank is the bailee, vice versa is not true. Lesser lessee concept, bank is giving safe deposit locker to the customer, right? So bank is the lessor and customer is the lessee. Agent principal relationship, bank act as agent who actually follows the instruction of the customer, which is the principal, right? Vice versa is not true. Indemnified and indemnifier. So bank is the one to whom the promise is made. Bank is indemnified and customer is the indemnity holder. Right? Now these you have to just look at out because all the things are explained. Right? Now two things, demand deposit and time deposit. Very easy thing. Demand deposits are those deposits which are payable on demand. Like there are current account, there is saving account. These are those deposits which are payable on demand. Whereas time deposit are those deposits which have a certain maturity time period and they are payable after that maturity time period. Because if, for example, if you have any FD that is for a period of 6 years, okay, so this is a time deposit. Demand deposit, any type of saving or current account, these are known as the demand deposit. Now in demand deposit, if this is a saving account, low interest rate are paid. If it is a current account, no interest are paid, right? And if FDs is concerned or time deposit is concerned, high rate of interest are paid, right? Okay, so this is it. This is unit 1. The most important things are covered. Now, if you have any doubt, kindly ask your doubt, everyone. And if no doubt, just please give a thumbs up. Everyone, see, we have to cover the complete 21 units. So please don't waste any time. Turant, just please give a thumbs up. If you have any doubt, kindly ask your doubt, or no doubt, give a thumbs up. Everyone. Right? No doubt? Okay. Good, 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 guys. Now, next is AML KYC guideline module. Now, some things I have covered in the theory and some questions I have covered in the marathons. Okay, so marathon that is going to take place on tomorrow morning 8 a.m. So half is covered everywhere because see, it is not possible to complete the whole thing in one class, and you all understand that I have to complete the most important thing, and that's why some important things are covered in this and some things are covered in the form of questions in the marathon sessions. Okay, so you have to attend both the things. Next, if we talk about the AML KYC guideline, most important thing, the stages of money laundering. So there are 3 stages of money laundering technically: placement, layering, and integration. Okay, first of all, what is money laundering? Money laundering is the process of cleaning the dirty money. If any money is originate from some illegal source, okay, the process of cleaning it, the process of inducing that money into the financial system in such a way that it is actually originated from a legitimate source, then it is known as money laundering. Now there are 3 stages of money laundering. First is the placement. First, there is dirty money. This person is just having the dirty money from criminal activities like drugs and trafficking and anything. Now this money is placed into the financial system, is deposited into the accounts, in different accounts, in different bank accounts, then this is known as the placement, means depositing it into the financial system. Now next is layering. Layering means now this money is actually moved to different accounts, because we have to hide the original source of this money because this money is a dirty money. So after depositing it into the account, this actually moved to different accounts, okay, and layered it with some good financial transactions so as to avoid the necessary scrutiny on this money, and that's why it is known as layering. And there is third thing which is known as integration. Integration means now then this money is what, after this money is moved to different financial account, this money is collected from each financial accounts and then it is utilized. Then it is utilized for what? It is utilized for acquiring some or for starting some legitimate business. Then it is known as placement. So first it is earned from dirty money or from dirty sources, then it is placed into the financial system. Third, it is layered, moved to other account. And fourth, then it is used to acquire some asset that is known as money laundering stage. Next, Finance terrorism. The stages of financing of terrorism, first of all, there is raising. Okay, so first of all, the terrorist organization raise money, and this raising can be done from individual or organization or their sympathizers. Okay, so first they raise money, then they move money. Okay, because raise is done across the world. If there is any terrorist organization which is USA based, okay, that the raising of the money is done from around the globe. Okay, now this money is moved to USA, right? So first there is a raising money, then it is moved to the place where that terrorist organization is originally from. Okay, next, then it is stored, because you all know, when the raising of the funds are done, especially in the terrorist activities, these are to carry out some specific task, right? So until that task, it is stored for a period of time, right? And finally, it has been used for carrying out that activity. So these are the four stages, right? Three stages of money laundering: placement, integration, placement, layering, and integration. There are four stages of terrorism financing. First is what, raising, then it is moving to the place where organization is, third storing, and fourth it is finally utilizing for some activities which for which they are raised, right? Next, if we talk about the next thing, who is responsible for formulating policies on anti-money laundering? So there is Financial Action Task Force. Remember, FATF is the main organization which look out the countries in the money laundering activities. Okay, and they take measure to stop this money laundering. Right. Next, there are different framework within the country also, which is actually for the prevention of money laundering. Like in India, there is Financial Intelligence Unit India. Now the task is they collect various financial transaction reports and business from the bank and financial institution. So this Financial Intelligence Unit India, they actually just receive the information of different type of transactions from different bank and financial institution if they think that this account might be involved in the money laundering process, right? Next, there is Enforcement Directorate. Enforcement Directorate is responsible for investigation and prosecuting authority for money laundering crimes. Okay, so this is what investigation and prosecuting authority, right? So they track, the Financial Intelligence Unit receive the information, then comes the task of Enforcement Directorate, which is responsible for just investigating and looking out that whether this is culprit or not, right? Then there is a special court. Special courts are set up for judging this money laundering crimes. Okay, and there are last regulators. Regulators are like the representatives of various business activities, okay, for discharging them from these crimes. So if there is any organization, okay, now any bank has some time or type of suspect that might be this organization involved in some money laundering activity, right? Now the report is sent to Financial Intelligence Unit India, right? Now there is an Enforcement Directorate which is responsible for the investigation. Now there are special courts who are judging these cases, right? But there are some representative of that company also. There are regulators of that companies also, which actually prevent that company from discharging the liabilities that are imposed on them. So these are known as the regulators, which actually represent that unit in which the cases are actually imposed. Okay, so this is the money laundering activities or the process of handling money laundering in India, anti-money laundering framework, right? Now, money laundering offenses. If we talk about the money laundering offenses, first of all, there is Section 45. Section 45 of Prevention of Money Laundering all stipulates that all offences under this act are deemed to be as cognizable and non-bailable offence. They are saying that Section 45 of Prevention of Money Laundering Act says that if there is any case relating to money laundering, this is actually non-bailable, and cognizable means you can be arrested without any arrest warrant. Okay, there is no arrest warrant that is needed in this money laundering case. So it is cognizable as well as non-bailable. You will not get bail in this case. Section 4 define the punishment. Now, punishment is what? It is the jail, which is not less than 3 years, and it can be up to 7 years, depending upon the intensity of the what crime, right? And in some cases, like if it is the case of narcotics and drugs and psychopath, then it is up to 10 years also. This section, very important, you have to learn this section 45 and section 5, right? Next, if we talk about know your customer policy. Now, what is know your customer policy? Know your customer policy is the process of identification and verifying the customer's identity when they are going to involve in a transaction with the bank system. So in early days, obviously you all know that bank just take the introduction of the new client with the older client or any of the employees. Okay, but now it is KYC which has been introduced. KYC is the process of just identifying and checking and verifying the client's identity, that okay, what they are saying is true or not before establishing the bank customer relationship. So this is known as know your customer policy. Okay, now if we talk about in know your customer policy, there are 4 key elements in the know your customer policy which you have to remember. First, customer acceptance policy. What is customer acceptance policy? First, the bank need to accept you as a customer. It means that, for example, I'm going to a bank and I'm saying that my name is Afreen and I want to open an account. First policy is bank need to accept you, that okay, you are Afreen, you are a customer of a bank, right? Now there is identification process. Now I am claiming that I am Afreen Asmat. Now I have to present any identity or proof that supports that okay, I am Afreen Asmat. So first, bank need to accept me as a customer. Second, bank need to identify me as a customer by verifying my identity or my IDs or proofs or anything, right? Third, risk management. Risk management means now after identification, I am a customer of the bank, right? Now, according to my profile, bank categorize me, or bank just categorize my account into medium, high or low risk account. So if I am just, for example, my transaction is very good, easy, I am just working in Oliveboard and everything is very clean. Okay, I'm not doing any cash transaction. I'm a very low risk category customer. For example, I am any jeweler. I'm dealing more on cash. I'm depositing cash every month, a huge amount of cash. Now, I am a high category risk customer. Now, the risk management is done. Fourth, monitoring of the transaction. Now, I am a client. Okay, I am categorized also. Now, my account is being monitored by the bank. Okay, so this is known as the monitoring of the transaction. So, 4 key elements you have to remember: customer acceptance policy, identification procedure, risk management, and monitoring of the transaction. Okay, now what are the organizational setup for this anti-money laundering? If we talk about two very important things, there are two types of posts which every bank needs to designate for the prevention of any type of terrorist financing or money laundering, and these two posts are designated officer and principal officer. Designated officer has these policies, like they check out that KYC policies are updated or not updated. They have to see that you should have a skilled staff in the bank carry out all the KYC functioning. You should have a proper appropriate functional setup to carry out the KYC requirement. So these are the functionings of the designated director. Now bank has the PO also. principal officer also. Now, what are the function of the principal officer? These are responsible for the implementation of any money laundering policies. They actually share information to Financial Intelligence Unit India, okay, which is responsible for collecting of all the financial reports, right? There is AML monitoring system updated, okay. So PO, principal officer, is responsible for just monitoring that, okay, your systems are well up to date or not well up to date. So there are different functions. So you have to remember two posts. Every bank must designate two posts for the anti-money laundering system, okay. First is the designated director and second is the principal office, right? Next. Now, what are the obligations? This is very important. Obligation, first of all, every bank need to verify the customer, okay, all the officially valid documents, all the identities, these need to be verified, okay, on ground also. Second, every bank need to maintain all record of transaction for a period of at least 5 years from the date of transaction. So if any transaction is done today, as a bank, you should keep the record of that transaction for a period of at least 5 years, right? And next, you have to maintain the records of the all identity documents, means whatever the customer have the identities that is submitted with you, you have to maintain the record of that identities for a good 5 years period, right? So this is very important, okay. So these are the obligation of Prevention of Money Laundering Act, okay. Reporting obligation. So Financial Intelligence Unit India, these report means these reports is to be submitted to Financial Intelligence Unit India by every bank on 15th of every month. And what are these monthly reports? These are, first of all, if there is any cash transaction, the cash transaction is rupees 10 lakh or more or equivalent. If there is any cross border wire report, okay, means if there is any cross border wire transfer of rupees 5 lakh or more, if there is any non-profit organization receipts of rupees 10 lakh or more, and if there is any counterfeit currency notes, okay. So these are the four reports which every bank, the information of these four reports, every bank need to send to Financial Intelligence Unit India on every 15th of the month, okay. Why? Because these are sensitive things, okay. So Financial Intelligence Unit India need to have a check on these, okay. Now, what are the implication? What are the punishments in this? Okay, so Financial Intelligence Unit India, they can issue a warning, written warning also. They can direct to take some remedial measures, and they can impose a monetary penalty also with a minimum of rupees 10,000 and maximum of rupees 1 lakh per violation. If any bank fails to comply with the rules and regulation that is mentioned in the Prevention of Money Laundering Act. So, first of all, they just sent the warning. They can impose a fine also to the director as well as to the bank also, right? So this is the complete unit. Second, the most important thing, if you have any doubt, kindly ask your doubt. Everyone, if you have any doubt, please ask your doubt. Everyone, guys, just please ask your doubt. And if no doubt, just please give a thumbs up. Guys, please don't waste the time. Just please give a thumbs up or ask your doubt. Done? Clear? Everyone, just please give a thumbs up. You, everyone, guys, just please give a thumbs up. If you have any doubt, kindly ask your doubt also. Okay. Done? No doubt? Clear? Only two thumbs up. Three. Only two or three thumbs up. Chaitanya, Malla, and Swaminathan. There are more than 20 bankers who are currently watching this session. I want a thumbs up from each and everyone. And if you have any doubt, kindly ask your doubt also. No doubt? Ravinder said no doubt. Ravi said no doubt. Clear? All thing is clear till now? Okay, good. Now, third unit, let's start with the operational aspects of KYC. So, KYC, you all know what are the operational aspects of KYC. Okay, done. First of all, if we talk about the operational aspects of KYC, so RBI instruction covered the customer requirement for customer acceptance and identification. Okay, so these are the process and step in KYC norm. First of all, there is a customer acceptance policy. Four key elements I have already told you. Now there is a detailed version. So first, bank need to accept you as a customer. Second, there is an identification process in that you have to justify yourself what you are claiming. I am claiming that my name is Afreen Azmat. I need to justify myself that I am Afreen Azmat by presenting my supporting identities, okay, to the customer. Now, third is the customer due diligence procedure. Customer due diligence procedure is the overall complete checking of the customer, okay, by checking the identity, the proof, the ground checking, the addresses, everything is to be checked. Now, some customer have the enhanced due diligence and some customers have the simplified due diligence. Now these are two stages, okay. Some customers, they, because they are a high risk category customer, so they sorry, they need to go with the enhanced due diligence requirement. Okay, there are some extra step in the overall checking of their profile. But some customer, for example, there is a student. Okay, now the student is just having the account. Okay, so they have a simplified due diligence requirement. Okay, there is identification of beneficial owner also. If you have any beneficial owner, for example, there is any company, right? That company doesn't walks to a bank to open the account. Obviously there are some representative of that company which are responsible for opening the account, maintaining the account of that company, who are termed as the representative of that company. So these are the beneficial owner. If you have any beneficial owner, the identification of that beneficial owner is through compulsory, right? Now there is a customer level KYC and monitoring which is done, and lastly you have to periodic update your profile. Okay, so these are the process and norms in the KYC. First of all, customer acceptance policy. Then there is a identification procedure. There is a due diligence requirement. Some has enhanced due diligence requirement, some has simplified, right? Then there is a, if there is any beneficial owner of your account, the identification of that beneficial owner is compulsory. Okay, now the KYC level is done and the periodic updation is okay. Now let us discuss some of the important point. Okay, I'm not covering every point, the most important point relating to that. First of all, if we talk about non face to face customer, very important, just listen carefully. Non face to face customer means any customer who are not visiting bank for every transaction, right? They are completely following the online procedure, their account is opened online, they have complete online thing, they never visited branch, that are known as non face to face customer. Now face to face customer, these customer must have a due diligence procedure. And what are the restriction of non face to face customer? First of all, the aggregate deposit shouldn't exceed 1 lakh. Okay, these are the restriction for non face to face customer. The aggregate deposit doesn't exceed rupees 1 lakh. Aggregate credit doesn't exceed rupees 2 lakh in the complete financial year. And term loans, they are eligible for a term loan, but it is limited to 60,000 per year. Okay, now these are officially valid documents for KYC: passport, driving license, proof of possession of Aadhaar number, voter's identity, job card, letter issued by National Population Register. Okay, next, simplified due diligence. Okay, now simplified due diligence, in this the account of self-help group is included. So if there is an account of any self-help group, they don't have to go with the complex due diligence requirement, they have some simplified due diligence report, right? For the account of foreign students, if there is any foreign students, So they have simplified due diligence procedure, and these are the limitations. First of all, local address they have to declare within 30 days, and this should be verified. Foreign remittances are allowed, but it is not exceeding rupees $1,000. Okay, and overall 50,000. If in rupees it is converted, 50,000, not more than that. And if dollar, USD dollar, 1,000. Right now, there is a person who don't have any officially valid document. For this, for including the financial inclusion, for connecting various customer to the bank offers small account facility also. Now, what is a small account facility? If we talk about the small account facility, small accounts are offered to those if any person don't have the officially valid document, but there are certain restrictions for that also. Very important. What are the restrictions for the person who don't have officially valid document and they have opened the small account? First of all, credit limit not exceeding 1 lakh annually, withdrawal limit not exceeding 10,000 monthly, balance limit not exceeding 50,000, foreign remittance not allowed, completely not allowed at all. Okay, and customers should provide the officially valid document within 12 months of opening the account. Very, very important. Okay, remember this. Next, periodic updation. So we have categorized the customer into three parts: medium, high, and low risk. So if there is any high risk customer, the periodic updation should be done in every 2 years. If there is any low risk customer, periodic updation is done in every 10 years. If there is any medium risk customer, periodic updation is done in every 8 years. Okay, periodic updation means according to the profile checking, you are either upgraded or degraded in the categorization, right? Okay, next thing, KYC, very important. Central KYC record registry, very, very important. Central KYC record registry, this is an authorized entity which is responsible for receiving, storing, safeguarding the KYC record of the customer in a digital form. So all the documents, all the things which are collected by the bank in the KYC process, the storage, processing, and safeguarding that complete documents in the digital format, this is the responsibility of Central KYC Record Registry. Remember this. Second important thing is Government of India has authorized the Central Registry of Securitization, Asset Reconstruction and Securities Interest of India, which is CERSAI, to perform the function of this. Okay, so this is very important for all of you. Okay, next, record management. So bank must have to follow all the prevention of money laundering regulations and the act. Okay, whatever the guidelines they have to follow in the management of the bank. Okay, second important thing, bank should have to maintain the record of the customer for at least 5 years. This you all know. And remember, they have to maintain the record of all the identity of the customer for the period of at least 5 years. Okay, so this is the record management, right? Now, if you have any doubt, please ask your doubt. In this unit, if you have any doubt, kindly ask your doubt, everyone. Kabish, Mansi, Mahend, Anand, Ravi, Swaminathan, Malla, Chaitanya, Hina, Ajay, okay, Panchal. If you have any doubt, please ask your doubt. Guys, don't make me repeat, okay? Don't make me repeat. Just please ask your doubt. And if you have any doubt, kindly ask your doubt. Done? Everything important I have told you. Everything important I have told you. Okay? No doubt? Everything is clear till now? Pakka? Okay. So moving to the fourth unit, which is the opening account of various type of customers. See, the questions related to this module A, I will be covering in tomorrow's morning 8 a.m. marathon session. Read out all the theory portion here in paid classes, right? And give your test in the complete module. Okay, so this same thing I have followed in IEIFS, and the result was amazing and tremendous. And that too, I want in the PPP examination also. Okay, just you have to be very consistent. How can we open account without any official valid document? The procedure is same, just you are offered a small account with the same type of restriction which I have told you. Okay, process is same. Yes, it is possible. Okay, that okay. Next, now starting with this. Accounts. So accounts of individual. First of all, these are the restriction or these are the terms and condition. First of all, it can be opened for single as well as in the joint name. The person should be of major by age, of sound mind, shouldn't be discharged insolvent or declared insolvent, or shouldn't be declared invalid for contracting any law, right? In certain situation, like if in the individual is not of sound mind or of minor by age, the court appointed guardian or the natural guardian is compulsory for opening the account. Okay, KYC is required for the guardian also, for the individual also. Okay, so this is the individual thing. Okay, next, if we talk about the next thing, joint account holder. Joint account holder, when the joint account is open, the relationship among the joint holder, first you have to specify the relationship. Okay, so if I'm going to open the account with my husband, I need to tell the bank that okay, we are husband wife, right? It is advisable to know that how much fund should be flowed or expected to come in this joint account, right? Joint account signature is done by all account holder in the account opening form. Okay, joint account holder generally opened by the all account holder being the resident in India. So if you are a resident of India and you want to open a joint account with the person living in India, it is very easy. Okay, joint account of a resident with NRI is only permitted if you have some close relationship with that person. You are living in India, you want to open any account with NRI, you must have a close relation with that person to open the joint account, right? So it is the joint account holder. Okay, even the not so important one. No. Just see, the not so important, I'm not giving you in the capsule batch. I don't want to confuse you all in the last 4 days, right? You have to rely and learn the PDFs only, okay? And the marathon session. Okay, just don't go by the complete 20 or 40 pages unit. Okay, don't go by that, else you end up doing nothing. And that's why we are launching this capsule batch for you to focus on most important thing. Okay, just don't be the one that okay मैं सब कर लूंगा. No, just go by the important thing in the last 4 days. Okay, okay, Swaminathan. Okay, so account of illiterate person, very important, see this. Okay, the rules relating to the account should be explained to the illiterate person to whatever language understood by him or her. Okay, she should be advised to withdraw the money by the account, and she have to come personally for withdrawing that money with the passbook every time. A current account should not be opened in the name of illiterate person. Remember, current account facility shouldn't be given to the illiterate person, right? Checkbooks shouldn't be issued. Okay, so if we talk about the checkbook shouldn't be issued to the illiterate person. Thumbnail impression of the illiterate person is to be taken for opening the account. Okay, so these are the important things to remember for the accounts of illiterate person. Now, account of a blind person. If we talk about the blind person, there is nothing restriction in the blind person for opening the account. Just the manager need to have the satisfaction with that blind person, right? So part 4 side photo is needed, signature and thumb impression is needed, and if the branch manager is satisfied, the person is allowed to operate the account by himself or herself. Okay, next. If we talk about the account of minor, now account of minor, bank is allowing the account of minor or to operate the account of minor independently if they are 10 years or above. Now, this is a condition that every bank has this authority to decide whatever the age they are allowing for the operation of the saving account by the minor. For example, any bank fixed this age at 15 years, any bank fixed this age at 18 years, any bank fixed this age at 10 years. So it is up to the bank, that bank is allowing which age of that minor person to operate that account individually, right? Opening of the minor account, they need to have a completion of KYC formalities, and the KYC of the guardian and minor both should be done. Okay, father is the natural guardian. Okay, father is the natural guardian, but RBI has permitted bank to open the minor's account with mother as a guardian also. Earlier there was father who is considered as the natural guardian, but if the father is not present, mother can also be the guardian. The minor should be literate, and two minors cannot open a joint account. Very important. Okay, so these are some conditions to which a situation based question can be given to you, right? So two minors, they cannot open the joint account. Okay, minor should be literate. The term the natural guardian doesn't include a stepmother or stepfather. Father is a natural guardian. Okay, KYC of guardian and minor both is compulsory. And to if you are 10 years or above, you are allowed to open and operate your saving accounts. Okay, but it is up to the bank, that bank is allowing what age to operate the saving account, right? Next, if we talk about the accounts of minor, the rules of the operation of the account of minor, very important. The rules of the operation of the account of minor. First of all, the minor account should not be allowed to be overdrawn. Overdrawn of the minor account is not allowed at all. Minor can draw a check, okay, if the minor attains the majority. Okay, the guardian is not allowed to operate the account. Okay, second, banks are free to fix the minimum age that I have already told you, at which they allow the minor to operate the saving account. In the event of death of the minor, the guardian has to close the account. If there is a death of the minor, so the guardian has to close the account of the minor. Now, if the guardian dies, so during the minority of that individual, so the balance is to be paid to the minor after he or she attains the age of majority. So these are very important guidelines you have to remember for the operation of the minor's account. Okay, now Hindu undivided family. Okay, Hindu undivided family, when a Hindu dies, okay, they leave a business behind. Okay, if they have a male heir, okay, that business is passed on to that legal male heir. Okay, and that business is converted into Hindu undivided family business. Right now, in Hindu undivided family, there is one male. Okay, the eldest male member, he is known as Karta, and the other family members, they are known as the co-partner. Okay, so earlier it was this, that only the eldest male member should be the Karta, but according to the recent ruling in the Delhi High Court, now eldest female member can be its Karta also. Remember this point, right? The other family members, these are known as the co-partner. Okay, when any account is to be open in the name of Hindu undivided family, all the members, okay, all the Karta and the co-partner, if they are adult, major by age, they have to sign the form, right? Now, the liability of the members, means the co-partners, is actually limited to the extent of share they have in that Hindu undivided family. Whereas the liability of Karta is actually unlimited, right? So this is Hindu undivided family. Okay. Okay. If guardian dies, minor should not have to operate the account till minor attains. Yes, Malla. Okay. If guardian died, okay, the money, whatever money is there in the account, is transferred or is given to the person when he attains the age of majority. Nothing else is allowed, right? Kavita, please ask your doubt. Kavita, please ask your doubt. Ma'am, can we add other guardian in the case of death of the guardian? No. See, natural guardian is mother and father. Okay, father died, mother is the natural guardian. Father, mother died. Okay, now the money is transferred to you when you attain the age of maturity. Okay, any doubt? Okay, so these are the Hindu undivided family. Very important this, very important this, very important this. This is so very important. Okay, remember this. Next, sole proprietor firm. Sole proprietor firm means the firm which is run by the individual, right? So individual, the account of a proprietary firm is actually treated as the account of individual, because sole proprietorship firm is the firm which is operated by the individual, right? So this is treated as the same, sorry, this is treated as the same thing. Okay, an individual account and the account of sole proprietorship, they have the same terms and condition. Okay, documents needed. So current account opening form, that is signed by the proprietor, signature and the declaration form. Okay, next, if we talk about the partnership, very important. Acha, see this is very important. Many case studies can be from here. Okay, many case studies can be from here. Okay, see this. First of all, Section 4 of Indian Partnership Act defines partnership as a relationship between two persons who agreed to share profit and loss of a business carried out, right? Now, registration of partnership is optional except in the case of Gujarat and Maharashtra. So Gujarat and Maharashtra, these have the compulsory registration, else the registration of partnership is optional. Okay. Now, checks payable to the firm should not be credited to the account of any partner or employee. If there is any check which is in the name of that partnership, that check shouldn't be deposited in any personal account of the partner, right? In case of any dispute, if any one partner has given the notice of a stoppage of operation, the operation must be stopped immediately. Okay, and the account would be operative again when all the partners have given their consent. Okay, when there is an addition of any partner, this is very important. See, when there is any addition of the partner, the old account can be continued if the balance is credit. So if you have a credit balance, okay, so by the entry of the new partner, if their partnership account has a credit balance, the old account can be continued. Okay, but if the partnership account has a debit balance, now the old account, first of all, it should be freezed and a new account should be opened. Okay, so debit and credit both have different conditions here. Death of the partner automatically dissolves the partnership firm. Okay, now the operation in the account should be stopped immediately, and to determine the liability of the deceased partner, the banker should close the account of the firm and secure a letter of administration from the court. Very important. Okay, many case studies can be framed from this slide. Okay, so you have to remember. Next, limited liability partnership. See, normal partnership, partners have unlimited liability. Okay, their personal assets are also responsible in the case of dissolution. Okay, now if there is a limited liability partnership, first of all, the partners' liabilities are limited to the extent of the contribution they have in the partnership. Two designated partner should have at least two designated partner. Designated partner should have a designated partnership identification number. Okay, designated partner, they are responsible for carrying out all the acts and activities and everything. A small limited liability partnership, it is the partnership where the contribution of the partners is up to 25 lakh and shall not exceed 5 crore in any case. It means that if you have a small limited liability partnership, the contribution of the partner shouldn't be exceeding 25 lakh. It is up to 25 lakh. But if it exceed in any condition, it shouldn't be exceeding rupees 5 crore. Okay, and the previous year turnover should be up to 40 lakhs. Okay, and if it's exceed, in any case it shouldn't be more than rupees 50 crore. So these are the two limits given. Necessary limits are these. Okay, 25 lakh and 40 lakhs. Okay, this is a small limited liability partnership. But if it exceeds, okay, for example, in any year the turnover exceed, turnover shouldn't be exceeding 50 crore in any case, and the contribution shouldn't be exceeding 5 crore in any case. Okay, very, very important. Okay, you have to learn, very important. It is the small limited liability partnership. Okay, now three type of companies: public limited company, private limited company, and one person company. Public limited company, first of all, minimum of 7 members required, maximum no limit. Okay, now here 51% or more share is held by the government. Okay, private limited company, minimum of two members and maximum of 200 members is allowed. Okay, and remember here the 51%, the share of the government is actually less than 51%, then it is a private company. One person company means a company which is run by any one individual, then it is known as the one person company. Very important, again, very important. Next, legal entity identifier. It is a 20-digit alphanumerical code, okay, that is given to the parties. Okay, and it is a unique identifier if the party want to have a financial transaction worldwide. If they want to transfer money worldwide, they are having the financial transaction with the rest of the world. Okay, so for every user or for every company, there is a unique legal entity identifier number that has been given, which is a 20-digit alphanumerical code, right? And this is needed especially when you are going to have a payment of 50 crores and above using the RBI's RTGS and NEFT. Very important. How many digits? 20 digits. What is the amount? If you are going to have a transaction of rupees 50 crores and above, you need to have this legal entity identifier, right? So this is the complete chapter. If you have any doubt, please ask everyone. Okay, what about nominee in minor case? What about nominee in minor case means? So see, nominees are the guardian, right? So guardian means what? First of all, guardian are operating the account, right? So guardian are operating the account. They are responsible for managing each and everything. If the minor dies, the guardian have to close the account of the minor. And if the guardian dies, then minor, they are paid money when they attains the age of majority, right? If father mother not present, then the court appoints a court appoints a formal guardian for the operating of your account. Okay, done. Limited liability partnership, where the liabilities of the partnerships are limited. Okay, in limited liability partnership there is a small limited liability where the contribution of the partner doesn't exceed 25 lakh and the turnover doesn't exceed 40 lakhs. And if the contribution exceed 25 lakh, in any case it shouldn't be more than rupees 5 crore. Okay, and if turnover exceed 40 lakhs, in any case it shouldn't be exceeding rupees 50 crores, right? Done. Father as a guardian and mother act as a nominee, that is also good. Done. No doubt. Can we move to the next thing? Everyone, Can we move to the next thing? Everyone just please comment. Okay, okay. So let's move to the next unit, that is operational aspects of deposit account. Okay, so operational aspects of deposit account, first of all, very important is current account. Current account is for business transaction, you all know. Okay, so if you are engaging yourself in a, sorry, if you are engaging yourself in a business transaction, okay, for the management of that business account activities, you are offered the current account. No interest is paid in the current account, and a current account cannot be opened by minor. Okay, however, if the minor needs to open the current account, the natural guardian, they are operating the current account. Okay, Parda Nashin woman not allowed to open the current account. Illiterate person and blind person, these are those persons which are not offered the current account. Okay, next, no restriction on the withdrawal and deposit amount. Next, saving account. Saving account, it for inculcating saving habits in you. Okay, so if you have some saving habits, if you want to save, okay, you are a normal college going student, or you are not engaging in any business transaction, you are offered a saving account, right? Saving account can be with check and without check facility, right? Interest is payable in the saving account, but it is comparatively less to FDs, right? Now bank are free to decide the interest they are offering on the saving account, but there are two restrictions. Okay, first, every bank has to offer a uniform interest rate on the saving account up to the deposit of rupees 1 lakh, irrespective of the limits of the account. So, for the first 1 lakh, every bank has to offer the same interest rate. Okay, and for over and above 1 lakh, then bank are free to decide the interest rate whatever they want to offer to their customer. Okay, next, eligibility to open the saving account. First, individual, either in the single name or joint name, they can be open. Minor age above can open the saving account. Karta of Hindu undivided family can open the saving account. Entities of the categories which are permitted by Reserve Bank of India, so these are those persons which are allowed to open the saving account. Okay, now very important, it is basic saving bank deposit account, which is different from the saving account. Basic saving bank deposit account, these are two different things. Okay, basic saving bank deposit account, first of all, it is actually to include the more and more people with the banking system, which is known as financial inclusion. Free services are offered in this account like cash deposit and money transfer. These are the free services which are given and offered in basic saving bank deposit account. No limit on the number of value of deposits in a month. A minimum of 4 withdrawals per month is allowed, including the ATM withdrawal. Bank can offer additional value added services, but it is up to the customer, either they want to accept it or reject it. Value added services means you have to pay for that services. There are some free services also, there are some value added services also which are offered in the BSBDA account. Okay, now they don't require any minimum balance. You don't have to maintain any minimum balance in this BSBDA account. Any individual, if there is one individual, they hold only one BSBDA account. And if you are opening the BSBDA account, no other saving account is allowed to you. So you have to close the saving account if you have opened the BSBDA account. Okay. Now holder of BSBDA account is not eligible to open any other saving bank account. Okay. And they have to close. If they have any saving account, they have to close within 30 days of opening this BSBDA account. Okay. Customers are allowed to have other type of deposits with BSBDA account. This is allowed. Okay, so customer can hold other type of accounts, but not the saving account. Okay, so BSBD account, maximum withdrawals, what is allowed? No minimum balance required. One person, one BSBD account. No other saving bank account deposits is allowed. Other deposit is allowed. Right? Okay, next. FDs. What are FDs? If we talk about the FDs, these are the term deposit. You all know. Okay, these are payable after a specified period. Minimum is 7 days, maximum is 120 days. FD of 3 crores and above, very important. Acha, this limit actually recently is updated also. Okay, so I have seen this, this limit has recently been updated also. Okay, so please check the updated version also. Okay, you have to remember the older version also and updated version also, please. Okay, so this limit is updated recently, you have to check out that also. So if there is an FD of 3 crores and above in the case of scheduled commercial bank other than RRB and small finance bank, and 15 lakhs and above in the case of RRBs, these are actually categorized as the bulk deposit, right? Updated limit you have to check. Okay, bank shall have the term deposit without the premature withdrawal. So bank can offer you the term deposit facility without premature withdrawal, means you cannot withdraw before the time period, right? But if you have 15 lakhs FD, 15 lakhs or below FD, then bank should offer you this premature facility. So if you have an FD of 15 lakhs or below, this FD should come with a premature withdrawal option. Okay, else bank are free to decide whether they want to offer you the premature withdrawal or they don't want to offer you in the premature withdrawal. Now, what if BSBD? You have to close the any other saving account. Okay, you have to close the saving account in the same bank. Okay, next, recurring deposit. Now, what is recurring deposit? These are in the nature of fixed amount that is being paid by the depositor every month for a predetermined period. So, if you are depositing any fixed amount every month on a account, then it is known as recurring deposit. Now the maturity arrives, okay, based on the cumulative amount. Okay, this is paid with the additional interest rate which can be compounded at a quarterly rate of interest. No recurring deposit is accepted under this special FCNRB scheme. Okay, so recurring deposit, very simple, you are actually depositing a fixed amount every time period or every month, okay, for a predetermined period of time, then it is known as the recurring account. Clear? Next, annuity deposit. Recurring deposits opposite is annuity deposit. When you are depositing every month some amount for a predetermined period, this is recurring deposit. Annuity deposit, when you are receiving a small amount, okay, on a monthly or quarterly basis for a predetermined period of time, then it is known as the annuity deposit. Okay, so annuity deposit, for example, for an annuity deposit of 5 years with a quarterly installment, quarterly means you will receive the quarterly payment, customer will receive the quarterly payment of equal amount which include the principal as well as the interest amount. So these are actually opposite, annuity deposit and reverse deposit, right? Next, certificate of deposit, very easy. You all know about the certificate of deposit. This is first of all short-term money market instrument. These are issued by scheduled commercial banks and any other. They are issued in the denomination of 5 lakh and in the multiple of 5 lakh. Minimum time period is 7 days and maximum is 1 year. And these are specified by FIMDA. These are actually traded on the interest rate which are specified by FIMDA. And the certificate of deposit, these are traded in the secondary market. Okay, so these are some of the important points. Next, interest on the domestic current account. First of all, current account is concerned, no interest is paid in the current account, right? Current account, no interest is paid. Domestic saving account, so you all know, for the first 1 lakh Every bank has to offer the same uniform interest rate. And for the deposit over and above 1 lakh, bank are free to decide the interest rate, whatever they want to offer to their customer. Right? Next, domestic term deposit. So what are the interests? First of all, if we talk about the interest rate, these varies on the amount you are depositing in the term deposit and for how many period, right? For example, if we talk about the tenure of deposit, it is minimum 7 days and they can have a differential interest rate for different period. Size of the deposit, whether it is bulk deposit or not, इस पर भी depend करता है कि what the interest rate is offered to you. Okay, premature payment facility is mandatory for term deposit of 15 lakhs and below. So if you have any FD or term deposit and the amount is 15 lakhs and below, premature facility, it is definitely offered to you by the bank, right? And remember, no interest is paid if you have a premature withdrawal before 7 days, right? Then in this case, no interest is, okay? Additional interest rate, it is offered in the domestic deposit. Senior citizens, 0.25% to 0.5%. Staff is 1%, right? Now, interest in the account which is frozen by the bank. Now, there are some accounts which are frozen by the bank. Now, in this, always remember, the interest is paid regularly on a regular basis by the bank. Okay, so bank, they are doing their work. If the account is frozen, no activity take place on that account. Okay, but bank has to continue giving interest on the deposit of that account, and they have to credit the interest regularly on that account, right? Next, there is DEF. Okay, DEF, the full form is Depositor Education and Awareness Fund. In 2014, it is started. If there is any dormant account, dormant deposit means no transaction is made, no debit, no credit, nothing, right? So now in this, after 10 years, the amount is actually transferred to F. Okay, now the depositor can claim back their amount from the DEF also. If for a long 10 years your account don't have any activity, this is dormant. Now the fund is being transferred to DEF. Now the depositor wants their fund back, so they can claim their fund back from the bank. Now bank has to claim it back from DEF. Whatever the additional expenses bank have to incur to the transfer or taking back that amount, so these additional extra charges, these should be compensated by the customer to the bank, right? Now, if we talk about the DEF thing, the rate of interest in the DEF is 3% per annum in a simple rate of interest. The bank shall entitled to claim refund of the entitled eligible amount in Indian rupees only. So if the depositor want back their amount, bank need to have that amount transferred to their account, and that should be in Indian rupees only, right? The depositor can claim the amount either in Indian rupee or in the foreign currency, okay, equivalent. So the depositor, they can claim back in any currency, but the bank, they have to claim back in the Indian currency. Okay, so this is the DEF. Now, what is garnishee order? Garnishee order is the order that is issued by the court to the bank in favor of the judgment debtor. The bank is instructed by the court that you have to freeze certain balance of the debtor amount or debtor account and credit it to the creditor account. So if I am a debtor, right, I have some amount in my account, okay, but I am a debtor, okay, I need to return some money of the creditor. Now that creditor can have the garnishee order in my name. In this garnishee order, the bank actually instruct my bank, means the debtor bank, that you have to freeze certain amount in debtor's account and transferred directly to the creditor account. This is known as the garnishee order. Okay, now in this garnishee order, always remember the very first step is to pass the order nisi. Okay, now in this order nisi, this is the first step. The bank should give you, sorry, the court is actually giving you the time for settling everything in this order nisi. They are giving you time that you have to present your side also. Okay, after this order nisi, there is a garnishee order that is given by the court, right? So this is it. Now if you have any doubt, please ask. Okay, Hina Sharma, say, listen, what is garnishee order? Garnishee order, the court actually issues the garnishee order which directs the bank. Bank is known as the garnishee, that you have to withhold a specific amount from the debtor's account, transfer it directly to the creditor account. This is known as garnishee order. The very first step is to offer you the garnishee order nisi, and then there is a garnishee order absolute, which is the final order of the. Okay, any more doubts? Guys, any more doubts? If you have any more doubt, kindly ask your doubt. Everyone, any doubt? Or if no doubt, just please give a thumbs up. You have to give a thumbs up, right? If no doubt, just please give a thumbs up. Hina, done? Done, guys? No doubt? Good? All good, everyone? Till now, all good? Good, good, good. Good, guys. Okay. Next is operational aspects of handling and clearing cash and check, right? In this, the most important thing is the check truncation system, CTS system. Okay. CTS, positive pay system, very important. CTS, very important. So let us discuss these important things. Okay. First of all, if we talk about the check truncation system, the process of eliminating the physical movement of the check by the scanned image of that check in complete clearing process, then it is known as check truncation system. Check truncated means eliminating the physical movement of check from the clearing process, and instead of the physical movement of the check, the scanned image of that check is transferred in the complete clearing process. Okay, that is known as the check truncation system. Now, what are the characteristics of the check truncation system? First of all, electronic image of the paper. Only the bank which are involved in the clearing house can truncate the check. It means that the customer by themselves cannot have the scanned image of the check. You have to deposit the physical check. Only the clearing house and only the bank who are involved in the process can truncate the check. Electronic image is the substitution of the physical check. The truncation is done only in the clearing process or clearing cycle. The paper check is kept in a safe custody of the clearing house after the check is being truncated, right? The addition of the digital signature is always optional. You have to remember the addition of the digital signature in the check truncation is completely optional. It is not compulsory. Okay, these ना एक एक वर्ड ये बहुत इंपॉर्टेंट होते हैं कि क्या चीज ऑप्शनल है, क्या कंपल्सरी है. द केस स्टडीज, हाउ द केस स्टडीज आर फॉर्म, केस स्टडीज आर एक्चुअली, एटलीस्ट मी, I will actually frame the case studies only based on these words. Okay, either it is optional or not optional, it is mandatory or not mandatory. Okay, so you have to remember these words, these are very important. Okay, now it is shredded or destroyed. How? So it is shredded and destroyed once the complete clearing process is done. But when the check is truncated, it is kept in a safe custody with the bank. Okay. Next, if we talk about the process, see the process, very important. Okay, first there is a presenting bank. See here, first there is a presenting bank. Okay, now from this presenting bank, the check is actually scanned and is transferred for the presentation clearing. Now, in this presentation clearing, there is a clearing house which actually verifies the scanned image and arrive as a settlement figure and forward it to the paying. Now, this paying bank, after every checking, if satisfied, pays the check off, and if not satisfied, return the check in the return cycle. Okay, so there are two things. If the paying bank is satisfied, okay, they pay the check, and if the paying bank is not satisfied, they come create a return cycle or return file. Okay, and in this return file, again this paying bank give backs this check to the clearing house and then this clearing house give back this check to the presenting bank. Okay, so this is the presentation cycle and this is the return cycle, and they both together form a clearing cycle, right? So once again listen this: presenting bank forward this check to the presentation clearing, scanned, then here all the processing is done, arrive at a figure and then given to the paying bank. Paying bank is satisfied, then pays off, and if not satisfied, return this check in a return process. Return process is paying bank give it to the presentation clearing and presentation clearing give it to the presenting bank, right? Now, return cycle, same thing. This is known as the return cycle and this is known as the presentation cycle. And they both together form a clearing cycle. Now, the whole clearing cycle is actually enhanced or embedded with the security feature to maintain the privacy of the check. Okay, so there are public key infrastructure and end-to-end safety that is embedded in the complete clearing cycle. Okay, endorsement is there. There at the time of scanning, when the check is being scanned, a single line is endorsed and printed at the back of each instrument, which is the unique identifier for that instrument. Okay, now CTS check image. Okay, now in check truncation system, what is this check image? Okay, first of all, in India we use two type of images: grayscale and black and white image. Okay, three images of the check scan images is taken: front grayscale, back front black and white, and back black and white. So these three images are taken, right? Images of the checks are taken by a specific scanner. Okay, you just don't have to use that simple camera. There is a specific scanner which is used for taking the images of the check, right? Images that do not meet specification are rejected. There is a rigorous quality check in this. The paying bank, the last bank, if not satisfied with the image quality, they can demand the physical check in the clearing process. And that's why the physical check is kept in a safe custody with the clearing house. Because if paying bank is not satisfied, they can demand it back, or they can demand the physical check also. Okay, and there is public key infrastructure for data and image security, right? Now, very important, positive pay system, very important. Positive pay system, it is reconfirming the details of the large check. So if there is any check, okay, and it has a large value, the bank needs to reconfirm the details of that check. Like the bank reconfirms the date and the name and the amount, everything, and the maker of the check, they have to reconfirm the details either in a telephonic conversation or through an email or through a message or anything. Okay, so this process, reconfirming of the detail of the large amount check, it is known as positive pay system. And remember this, very important, Bank have to make such facility available for all the check if the amount is 50,000 and above. And for all those check which have 5 lakh and above, bank has to mandate this positive pay system. So for all check 50,000 and above, bank has given this option of positive pay system. The receiver, this is up to them. Either they want to avail this positive pay system or not. But if there is any check in which the amount is 5 lakh and above, this is compulsory and mandatory for the bank to have this positive pay system. Very important. Okay, next. If we talk about the RBI's guideline on the collection of the instrument or anything, first of all, you all know that in India, the check is payable only if it is presented within a specified time period, and that time period is 3 months. Okay, so currently that time period is 3 months. For example, any check is actually passed today. Okay, so from this time period till the period of 3 months, you have to present this check within a specified period of 3 months. Okay, and if you haven't present this check within 3 months, the check is being stale. Okay, next, check instrument lost in transit in clearing house. So if there is any check which is lost in the clearing process, the very first thing the bank need to do is to inform the account holder so that she can inform the drawer to stop payment for the check. Very important. And this is obviously very important. This you all know, I know. Okay, so 3 months is very important. Next, cash and its custody, very easy. So these are the general guidelines, and these are for the cash balance. Very easy, that there should be a strong room, this should be kept within a manager, or there should be a custody. These are very, very easy. Okay, so you just have to read it out, cash and its custody. Okay, nothing very important in this. Okay, now any doubt, please ask your doubt. Ma'am, but many bank not taking PPS for above 5 lakh. It is mandatory. Yes, it is mandatory. Positive pay system for 5 lakhs and above. It is mandatory that bank has to give this positive pay system. Okay, it is not optional. Optional in the case of 50,000 and above. Okay, done. Done, guys. Any doubt? Please ask. If you have any doubt, kindly ask your doubt, guys. If you have any doubt, please ask your doubt. No doubt? Perfect. Can we move to the next unit, bank customer relationship? Hmm. Okay, done. Okay, bank customer relationship, sorry, bank special relationship. First of all, if we talk about the thing mandate, see, very important things, just please see this. A mandate, it is an authority by the account holder in favor of any third person to act or to do or to perform certain act on his or her behalf. So this is known as the mandate. Okay, the customer informs the bank about the authority given to the third person. For example, I am giving authority to my sister that in the absence of mine, you have to operate a certain transaction in my account. Now I have to inform the bank about this mandate. Okay, so the mandate is the third person to whom the instruction or to whom authority is being given. So in this case, my sister is the mandate. Signature of the mandatory is very important. Mandate is for a very short period of time. This is not for a long period of time, and this is ceased to be valid in the case of death, insanity, insolvency, bankruptcy of the account holder. Okay, a mandate can be withdrawn anytime by the account holder, and it is an unstamped agreement. Very important thing, right? So remember, these are the important points. First of all, it is an unstamped agreement. Short period of time. Authority is being given to the third person to operate the account on his or her absence, right? There is the third person who is also known as the mandatee. So this is known as the mandate, right? Next, power of attorney, the same thing. Power of attorney is actually the document which is given by one person, which is known as the donor, in favor of another person who is known as a donee or agent to act some thing or some authority on his or her behalf. This is known as power of attorney. Power of attorney and mandate, these are same thing, but the difference is power of attorney, it is a stamped document. It is more of a formal document, whereas mandate, it is an unstamped document. Okay, both in both actually the power is being given in favor of any third person that you have to perform certain act on his or her behalf, right? Now there is some general power of attorney and some specific power of attorney also. Now in general, there is the power which is given for more than one transaction, and if this is specific, the power is given for the single transaction. Okay, the person who is giving the power, donor, the person who is receiving the authority, called as the donee. Okay, next, banker's lien. What is banker lien? Banker lien is the right of the bank that bank can retain the possession of the goods that is kept by the debtor until the debt of the debtor is fully paid. I have received some gold loan and I have kept my gold as a collateral with bank. Now bank has the right to retain the possession of the gold until I fully repaid my debt. This is known as banker's lien. Now banker liens can be general and particular also. General liens means bank can keep any of my asset as a collateral, or possession of any of the asset can be taken by the bank in favor of the loan. But if it is a particular lien, bank has to retain only that particular collateral. For example, I have given some loan. I have received some gold loan, right? My gold is kept by the bank. Bank can, if this is a general lien, in this bank can stop the amount in my account also. Bank can have the can retain the possession of my gold also, because it is generally bank can opt any of this. Okay, but if it is a specific lien, it means that bank has to hold or retain the possession of only gold, not any other things. Okay, until the debt of mine is fully paid. Next, if we talk about right to set off, right to set off means, see, if I have two or more accounts, okay, in the same bank. Now bank has the right, if I have two accounts, one account shows a debit balance, another account shows a credit balance, right? So bank can use the right to set off. It means that bank has the power, then they can write off my debit balance of one account with the credit balance of another account. This is known as right to set off, right? Now, right to set off, there are some cases in which automatic right to set off is taken. For example, death, insolvency, if there is a garnishee order received. So in this case, automatic right to set off is actually taken. Next, right of appropriation. I'm giving you example. Right of appropriation says that, see, if I have deposit some amount in my account, right? Now that same account has some loan also running. I have some loan EMIs running on that account also. Okay. Now, if I deposit some amount in the account, right, and I haven't specified the reason for depositing that amount, so bank can utilize the right of appropriation. It means that bank can utilize that same amount to settle my loan or EMIs in the same account. That is known as right to appropriation. Right to set off, if I have two accounts, okay, in the same bank, one has debit and one has credit, the debit balance can be set off by the credit balance. Right of appropriation, in one account, if I have loan running, if I have deposited some amount and I haven't specified the reason for depositing the account, the bank can exercise this right of appropriation and set off my loans or EMIs with the amount that I have deposited in the account. That is known as right of appropriation. Any doubt? Any doubt? Guys, ask your doubt. Any doubt? If no, please give a thumbs up. If no, please give a thumbs up, everyone. No doubt? Pakka? Okay, good. Now, next, operational aspects of NRI business. Everyone, just please try to listen each and everything. So I'm covering the most important thing for you all. Okay, so just please try to listen each and everything. Okay, so operational aspects of NRI business. First of all, if we talk about under this, there is NRE account, which is important, NRO account, which is important, FCNRB account, SNRR account. Okay, so these are the account which we are going to discuss in this chapter. Okay, first of all, there is NRE account. NRE account can be of saving, current, recurring, or FD. Okay, these are the account which are maintained by NRI. These are account in which the NRI, if they want to transfer any foreign currency to India, they can have this NRE account. Okay, so NRE account is for NRI to transfer their earnings to India. Next, NRE account, the FD. If you are having FD in NRE account, it is 1 year. The time period, minimum time period is 1 year. Interest rate, that depends upon the account. Additional interest rate is not allowed. Always remember, premature withdrawal of the term deposit is allowed with some penalties. Next, if we talk about the NRO account, NRO account means if you are any person which are resident outside India. As per section 2 of FEMA, you can maintain any account or you may maintain an account for bona fide transaction denominated in Indian rupees. It means that if you have any transaction, you are carrying out any transaction which are denominated in Indian rupees, for carrying out these transaction, you can have the NRO account. The types, it can be saving, current, term deposit, recurring and deposit. Tenure here is 7 days. If you are maintaining an FD in this NRO account, it is 7 days. In NRE account, minimum is 1 year. Okay. Term deposit, if we talk about the term deposit, rates can be varied. Okay, rates can be varied depending upon the time period as well as bulk deposit or not bulk deposit. Ceiling rate, rates cannot be higher than the domestic rupee term deposit rate. Additional rate of interest not allowed. Next, the difference between NRE and NRO account, just have a look. First of all, the full form, okay, non-resident external rupee account, not a resident ordinary account. Meaning it is for NRI to transfer their foreign earnings to India. It is for NRI to manage their earnings in India, right? Tax free, here the interest is tax free, here the interest is taxable. You can easily repartite the fund that is in the NRE account. Repartite means send back this fund to the country back. Okay, so if you are living in USA, you have transferred your earning to India, you can transfer it easily back to USA also. No restriction on that. But here, the restriction is there. If you have any amount in NRO account, there are specified limit within which you have to transfer back the amounts to outside India. Okay, joint account can be opened by two NRIs. They can be opened by NRI with the citizen also. Okay, deposit and withdrawal, very important. Here you can deposit in foreign currency and withdraw in Indian currency also. Here you can deposit in both the currencies, but the withdrawal can be take place only in Indian rupee. Okay, so these are the difference between NRO and NRE account. Okay, next, there is foreign currency non-resident bank scheme. Now, what are this scheme? First of all, for which this account is offered. So, if you are any NRI and you wish to have a FD account in India where you can hold your money in the foreign currency. If you are any NRI, you want to have FD in India and you wish to hold the money in the same foreign currency you have earned, you can have this FCNRB account. So very important thing is FCNRB account is only for the FDs. It is especially for the FDs, nothing else. Okay, so these are the term deposit account, not a saving. Okay, tenure of term deposit, minimum 1 year, maximum 5 year, and these are the schemes. Okay, minimum what, maximum 5 years. Next, SNRR account. SNRR account, special non-resident rupee account. Okay, now it is for what? If you are any foreign national, see, it is not for NRI. If you are any foreign national and you are actually engaging in a business transaction with India and in a very regular basis. So if you are any foreign national and you have a business relationship in India with the individual or entities in India, you can have this SNRR account. That is a special non-resident external rupee account. Okay, because it is for the business transaction. So it is a current account, and so current account, no interest is paid. In the current account, no interest is paid. Balance, it can be repartited. Okay, all the transaction is subject to a payment of applicable taxes in India. Okay, now what are the investments which are prohibited by NRIs? Very important portion. So in which sectors the FDIs is not allowed, you can say, or in which sectors that NRI are not allowed to have investments in India. So these are the prohibited sector, like lottery business, gambling, chit fund, nidhi fund, tradings, real estate, okay, and activities which are not open to private sector like atomic energy or railway, right? Very, very important. Remember this. Okay, so this is it. Any doubt, please ask. If you have any doubt, please ask. Everyone, if you have any doubt, please ask. Same as SDI. Yes, yes, same as FDIs. Right? It's the same thing. Okay. Done? Anyone? Any doubt? Okay, now give me 2 minutes, guys. Okay. I just want to have water. Just want to have a 2 minutes break from all of you. Okay. Just please, wait. फ्रॉम द क्वेश्चंस फ्रॉम टुडे आईईआईएफएस, देखो आईईआईएफएस का पेपर देखते हुए पेपर तो बहुत इजी था, ऐसा मैक्सिमम बैंकर्स का कहना है। पेपर तो बहुत इजी था बिकॉज आईईआईएफएस का पेपर इजी रहा है, तो मुझे ऐसा लग रहा है पीपीपी का टफ रहेगा आप सबके लिए। पीपीपी का तो बहुत टफ रहेगा मुझे लग रहा है, फिर पीपीपी का काफी कॉन्सेप्चुअल आने वाला है और पीपीपी का काफी टफ, क्योंकि देखो एक ना एक पेपर तो टफ होगा ही होगा। आईएआईएफएस आप लोगों को इजी दे दिया गया, तो बी प्रिपेयर्ड इन पीपीबी, राइट? Okay, everyone, just wait for some time. I will start soon. Okay. Hmm. 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 Okay, so let's start. Okay, so cash management services, and it's important, very easy topic. Only you have to see what is cash management. Nothing is important in this topic else, and the questions related to cash management I will cover in the module. Okay, and so cash management is nothing. You don't have to do anything. Just read out this page, only this page. Okay, what is cash management? Collection, concentration, and disbursement of the cash. It actually make the institution ensure that you should have a level of liquidity, manage the cash balance, and should have the investment strategies for managing your cash flow in a better way, right? So the main thing or the main objective of the cash management is what? The optimization of the liquidity. It means that as a bank, as any financial institution, the cash management main objective of the cash management is to make sure that you should have the available funds for working, you should have a good funds for working, you should have a cash, you should have a liquidity within the organization, you should have proper investment strategies, right? So this is all about cash management. You don't have to learn anything in this cash management chapter, nothing complicated, nothing very interesting or very think the casual questions I will give you in the marathon, you will be completing there. Okay, now very important thing is payment and collection of check. Okay, now this is very important topic, you need to focus on this chapter. Okay. Okay. First of all, if we talk about this Negotiable Instrument Act, okay, Negotiable Instrument Act, we are going to discuss three things: bill of exchange, promissory note, and one more thing, okay, checks, right? So these three things are very important here. First of all, what is check? Check, you know, it is actually an instruction which is given in writing by the account holder to his bank. There is an account holder who actually writes the check and giving instruction to his bank that you have to make payment from this account. Okay, so this is known as the check. Now check, it can be drawn in the electronic form also with the digital signature also. And check truncation system, that you all know, the elimination of the physical check and replacing it with the scanned image. Okay, that is known as the check truncation. Okay, audio is clear to all of you? Bye. Audio is clear, everyone. Upadhyay, Kavita, Swaminathan, Chaitanya, Vikram. Audio is clear, yes or no? Clear? Everyone, now please comment, audio is clear or not clear? Clear now? Okay, good. Now, if we talk about the promissory note, what is promissory note? Promissory note is a promise to pay. Promissory note is an instrument in writing. Okay. Now, this shouldn't include a bank note or a currency note. Promissory note is actually an instrument in writing. That is a unconditional undertaking. Very important thing. Promissory note is an unconditional undertaking by the maker to pay a certain sum of money to the order or to the person or to the bearer of the instrument. So promissory note, I am making the promissory note. It means that I am promising you that I will pay you this amount whenever you demand. And that is the unconditional promise that I have made. This is known as the promissory note. The maker is actually the person who makes the promissory note or who pays. Okay, so the one who is promising to pay or the one who is making the promissory note, that is known as the maker or the payer. And the payee, the one is who is entitled to receive the payment. For example, Adhyay, I am promising to Upadhyay that I am responsible to pay you rupees 1 lakh whenever you demand. And this is unconditional promise. I am the maker and the payer also. I have to pay. And here, Upadhyay is receiving the money or who is entitled to receive the money. So, Upadhyay is the pay. Very important thing. See, don't get confused in these terms, right? Next, bill of exchange. Now, what is bill of exchange? You all know, right? Bill of exchange, when there is buyer and there is a seller. Okay, now the seller sells good to buyer. Okay, and for this the buyer promised to pay to seller. Okay, but this payment is not immediate. In this, the seller actually grants a time period or a limit that okay, you can pay after 30 days. Okay, for legalizing this transaction, the seller, they make the bill of exchange. Okay, in bill of exchange, the seller is instructing, to the buyer that the buyer has to pay this certain sum of money to seller at this specific date. Okay, so this is known as the bill of exchange. Now, in this bill of exchange, remember there can be two and there can be three parties. Okay, so this is two party, the one who is making the bill of exchange, the maker, the it is known as the drawer. This is the drawer. Drawer is the seller and the maker of the bill of exchange. The one who is instructed to pay, buyer. Buyer is instructed to pay because the seller is making the bill of exchange and instructing the buyer that you have to pay this certain sum of money to me after 30 days. So buyer is instructed to pay. Buyer is the debtor. Buyer is the drawee. Okay. And the one who is entitled to receive the payment, he is known as the payee. So here the payee is the seller. So in this case, the payee and the drawer, these are the same person. Okay, now assume another situation. Buyer, seller. Seller sell goods to buyer, buyer promise to pay. Now the seller draws a bill of exchange, drawer, that instructing buyer that buyer has to pay a certain sum of money, this certain sum of money to C, okay, after 30 days. Now here, C is the pay. Now in this case, drawer is different, pay is different, and drawee is different. In this case, drawer, pay are same, and drawee is different. Okay, drawee to the one who is instructed to pay, drawer, the one who is making the bill of exchange, and the payee, the one who is entitled to receive the payment. There can be drawee and pay, drawer and payee, that can be the same person in certain situation. These two are the situation. Okay, now difference between Promissory note and bill of exchange. Okay, first of all, number of parties. In promissory note, two parties. The one who is making the note, okay, and promising to pay, drawer. The one who is entitled to receive the payment, pay. Here, there can be three parties. Okay, here, maker cannot be the pay. Never. Here, drawer and pay can be the one person. Okay, in this case, see, drawer and pay can be the one person. Promise and order. The one who is making is promising in promissory note. The one who is making the note, he is promising to pay or he is entitled to pay. So it is a promissory note. Here, the one who is making actually directing the buyer that you have to pay to the pay, right? So this is different. Acceptance in promissory note, no acceptance is required. In the bill of exchange, acceptance is required. Now the nature of liability. Here, the drawer liability is primary and absolute. It means that the one who is making the promissory note, the liability to pay lies on the drawer, right? That you have to pay. So the thing is primary. I am promising Ubadya that I will pay you 1 lakh rupees. So my liability is primary, obviously. Okay. But in this bill of exchange, the drawer's liability is secondary. Why? See in this situation. Now here, if drawer draws a bill of exchange, okay, and drawee has to pay to C. Now, if drawee fails on payment to C, the first liability lies with drawee. The primary liability is drawee. And if drawee fails to pay to C, now the drawer has to pay. So the drawer's liability is secondary. So here the drawer's liability is secondary. Here the liability of the maker is actually primary. Clear? Okay. Next thing, payment in due course. Very important thing. Okay, everyone. Okay, payment in due course. Now, payment in due course have some terms. First of all, you should pay in accordance with the apparent tenor. Whatever is written in that check, you don't act to you don't need to act smart or you don't need to assume anything. Just do whatever it is written. Apparent tenor. Okay. You should have to pay in good faith without any negligence, right? To any person who in the possession or entitled to receive the payment. Apparent tenor, you have to check the date, name, uh, amount, time period, everything. Without negligence means honestly. Okay, payment to the person in possession, it means that whoever is the holder in due course, whoever is actually holding that check or who is entitled to receive the payment. Okay, next, protection to the paying bank, very important. Now it is very important, protection to the paying bank. First of all, in the case of forged endorsement in the order check, so if it is an order check, section 85 of the Negotiable Instrument Act protect that if the check payable to order is endorsed by or on behalf of the payee, the drawee is discharged by the payment to the endorsee. It means that, see, if there is any check that is endorsed or by or on behalf of the payee, the drawee is discharged from the payment to the endorsee. Okay, so this is the protection. Any forged endorsement in the case of order check. So if it is an order check and there is any forged endorsement that has been done, and if you have followed the instruction as a banker, okay, as a paying banker, you have followed completely the instruction, you have seen the order check, you have submitted into the account. Now what? Now the actually endorsement is forged. Okay, now there is a fraud in the endorsement, but you are protected because you have followed all the instruction. There is no liabilities on the paying banker in this case. Okay, second, now if protection is given in the bearer check also. Now if there is a what forged endorsement in the bearer check, so if the check is payable to the bearer means whoever is the holder of check. Okay, order means to the specific person, bearer whoever is the holder of check. Now because it is a bearer check, as a paying banker you have to follow the instruction. Whoever is holding the check, you have to pay that check to that person, right? And you have paid, you have followed the instruction. And if it is a fraud, if there is any forgery, you are protected from any type of liability. Okay, why? Because you have followed the instruction, right? Now, protection in the case of payment of a cross check. Now, the drawing bank on paying a cross check in due course entitled to place in the same position as if the amount is paid is actually what received by the true owner. In case there is a cross check, you have to deposit it in the account, right? You have followed the instruction, you have done everything right, you act honestly, you have followed all the instruction, you are protected from any type of liability if there is any fraud that occurs in this case, right? But you lose the protection, in which case, if you have made the payment of the cross check in cash. So cross check shouldn't be paid in cash, right? As a banker, you are protected until you are following all the instructions, okay? But if you have paid it to some other account, or if you have paid it in the cash, then you have lost your protection. So here, section 85(1), 85(2), and section 128. Clear? Next, if we are talk about dishonor of the check. Now, if the check issued by the person for the discharge is actually dishonored, okay, by on the ground that it has the insufficient balance. I have drawn any check, okay, and now it is dishonored because I have drawn the check of rupees 1 lakh. I have only 5,000 in my account and the check is being dishonored. Now it is a criminal offense, and in this case I am liable up with a jail that is up to 2 years, and can be fined, or monetary penalty can be imposed with the amount of the check, double the amount of the check, or both. So I can send up to the jail for 2 years. I can charge up with a monetary penalty of double the amount, or both. Okay, so this is the dishonor case, right? Okay, now if we talk about the conditions, okay, conditions should be satisfied. First of all, the check should be present within 3 months. Okay, the check should be present within 3 months. The demand for payment should be made within 30 days, and the drawer fails to make the payment within 15 days. If all this condition is met, but the check is dishonored only on the basis of insufficient balance, then this is the penalty that has been imposed. Okay, so this is the unit. Now, if you have any doubt, please ask. Everyone, everyone. No, it's a if it was a it can do they bank can do so, but if it is uh janmuch ke, if it is by will, then it can be the monetary penalty. Okay, done. Any doubt, guys? If you have any doubt, please ask. No doubt. Can we move? Can we move to the next? Yes or no? Okay. Rose, no issues, beta. Next time we will be clearing. Don't worry. Okay. Don't be disheartened next time. Okay. Then everything is clear till here, everyone. Okay. Next, responsibility of a paying bank. See, now what is the responsibility of the paying bank? I have only given the most important section in this one slide. You have to remember. Section 89 gives the protection to the paying bank which has been materially altered but not appeared to be materially altered. Any check which is drawn, for example, rupees 500, and it is now altered in such a way that it is not easy to detect that alteration with naked eyes. For example, I have added this 10 extra here. Now, you cannot tell that the check was originally drawn at rupees 500, but the alteration is done now 5,000. Okay. Now, in this case, if it is very, uh, very clean, not understandable by the naked eyes, then section 89 gives the protection to the paying bank. Now, in this case, if any fraud occurs or anything occurs, then there is no liability of paying banker. Now, section 10 defines payment in due course. So if you have paid the money in due course with all the instruction, apparent tenure, in good faith, without any negligence, within the time period, okay, you have followed all the instruction, section 10 of the Negotiable Instrument Act pays or gives the paying bank the protection against any type of liability. Section 31, it says that if the drawee bank having sufficient bank fund of the drawer in its hand, properly available to the payment of such check to make the payment when duly required to do so. So section 31 says that you should have, as a drawee means the one who is instructed to pay, means the bank. As a bank, you should hold the proper fund of the drawer in your hand, which is properly available for the payment of the check. Properly available for the payment of the check means it shouldn't be in the form of any FDs or anything. It should be properly available, sufficient balance should be there, so you should pay according to the apparent tenure. So these sections are very important. Section 89, section 10, it actually defines the payment in due course. And what is payment in due course? I have already told you. And section 31 actually defines that the drawee bank should have sufficient fund of the drawer in his hand to make the payment, right? So this is section 31. Done. Okay, good. Next. Now, responsibility of the collecting bank. There is some responsibility of the paying bank, there is some responsibility of the collecting bank. Okay, sections, again important sections I am telling you only. Collect bank is protected under section 131 of the Negotiable Instrument Act. Okay, and when it is protected, when they have followed all these rules, all these precautions have been taken by the collecting bank. First of all, the collecting bank has opened the account with all the references and sufficient document, confirmed the references, followed the KYC, ensured the crossing and special crossing, and verify the instrument, take the account into consideration, everything. Collecting bank has followed all these protection, and now if any forgery is done, now if any fraud occurs, then the collecting bank is protected under section 131 of the Negotiable Instrument Act. Okay, remember this very important thing. Okay, now there are some ancillary services function. Okay, so this is very important. See, bank has some main function. What are the main function of the bank? The main function, sorry, the main function of the bank is actually to accept money for the purpose of lending, right? But other than the main function, bank has some ancillary functions also, right? Like the bank provides the portfolio management services, the safe deposit locker, or the insurance services, mutual fund services, investment services. There are different type of ancillary, means add-on functions of the bank. Okay, so in this chapter, I'm only going to discuss 2 or 3 or 4 some important ancillary services. Why? Because you all know about the safe deposit locker, how bank is offering you the locker. This is, you all know. Okay, I'm just taking the most important thing related to the exam. Okay, and that what I'm explaining you in this chapter. Okay, ancillary servicing, unit 15. First of all, which section? If we talk about the nomination facility, it is regarding the safe deposit locker. So bank has this safe deposit locker facility as a ancillary services that is being offered to the customer. Now in this the relationship between the bank and the banker is lesser and lessee. Everyone knows. Acha, tell me, bank and customer, who is lessee and who is lesser? Just tell me one thing, everyone. Who is lesser and who is lessee? Everyone, tell me here, who is lesser and who is lessee? Safe deposit locker. Guys, जल्दी से बताओ. ये तो पहले ही पढ़ाया ना, ये कैसे भूल गए आप लोग? Yes, bank is a lesser. Bank is giving, right? And customer is a lessee. Okay, now, first of all, Section 45ZC to Section 45ZF, Banking Regulation Act deals with the nomination facilities in the locker services. These are important things. Okay, you have to remember, first of all, for a single operated locker, the nominee can be only one. These are very important. Okay, for single operated locker, nomination or nominee can be anyone. Joint nomination can be one or more. Okay, photograph of the nominee is to be required. Nomination form should be signed and should be prescribed by the rules and regulation. Acknowledgement of the form should be there. These two lines are very important, you must remember. Single account, single nominee. Joint account, more than one nominee is there. Okay, next, if we talk about the closure and discharge of the locker, now this is very important, some important thing related to the closure and discharge of the locker. First of all, discharge of the locker content if the locker remains inoperative for a very long period of time, say 7 years. So if the locker is not operative for a complete 7 years, okay, and even the locker hirer is not located and the rent is being paid regularly, the bank shall have the liberty to transfer the content of the locker, okay, to any nominee or legal heir in a transparent manner. So this is the right of the bank. Next, discharge of the locker due to non-payment of the locker rent. So the if the locker rent is not paid for a good continuous period of 3 years. Now in this case, after giving certain notices and educate time, bank have this right that bank can break or open that locker. Now for this, first of all, locker hire, if not traceable, the bank shall issue a public notice in two newspaper, okay, one in local language and one should be in English, and this should be there for giving reasonable time to the locker hire to be present. And if the locker hire is not presentable at this time period, bank has all the right to break the locker off and to discharge the content of the locker in a transparent manner, right? Next, custodial services. Now this is also the add-on services that has been offered by the bank. First of all, custodian bank, it is a financial institution that hold customer securities for safekeeping to prevent from being stolen or lost. If the customer has some bonds, stock, or other electronic or physical format, anything, for the safe custody of these financial instrument, bank actually act as a daily in this case. It means that bank as a custodian is a financial institution which provides safety to all these items like stocks and bonds and other assets which can be held electronically or in physical format for the prevention of being stolen. Then it is known as the custodian. Okay, so always remember, now in this case you can relate the bailer bailee concept. Bailer is the customer because customer is giving document for the safe custody and bank act as a bailee. Okay, next, there is a portfolio management services which is also an ancillary services which is offered by the bank. Now what is portfolio? Portfolio means the basket of investments you have. Portfolio means the basket of investment, means as a customer, as a individual investor. I have different investment in money market, capital market, gold, or securities, or debentures, or anything. Now that complete profile of my investment, it is known as a portfolio. And bank offers portfolio management services. It means that bank provides you ideas and ways and suggestions how to improve your portfolio, how to better invest your money in different type of financial instrument. Okay, so this is the portfolio management services, right? Now, if you have any doubt, please ask. If the custom, customer comes to the locker once every 5 years and pays the rent, yes, it is operated. You have to operate once. Okay, it should be inoperable for a complete 7 years. Then bank has the right to what? To just discharge the liabilities. Okay, okay, everyone. Any doubt? Please ask your doubt, guys. If you have any doubt, ask your doubt. Done? Any doubt? Everything is clear till now? Can we move forward? Okay. Only two thumbs up. There are 20 bankers who are watching currently this session. Guys, if you have any doubt, please ask your doubt. And if no doubt, just please give a thumbs up. If no doubt, just please give a thumbs up. And if doubt, please ask your doubt. Okay. Don't make me repeat. Okay. Don't make me repeat. Good? No doubt? Okay. Okay. Let's start the next chapter, financial inclusion and literacy. First of all, what is financial inclusion and what is financial literacy? First, I will tell you this and then everything else. Okay. Financial inclusion. Financial inclusion means connecting various people to the financial system of the economy, that is known as the financial inclusion. Financial literacy, it means the improving the knowledge and understanding of the use of financial products. So if you are providing the knowledge and understanding to use different type of financial product and services, and you have to make the decision whether to avail this facility or not to avail this facility, this is known as financial literacy. Okay, very important this point. Financial literacy and inclusion, they are known as the twin pillars. Okay, why? Because financial literacy, this actually stimulates the demand side. If you are financially literate, if you are make aware of the product, for example, there is some new mutual fund scheme that has been offered. Now if you are aware by the financial literacy, there has been campaigning which is done, and you are made aware about this new mutual fund product that has been launched in the market. Now it actually stimulates your demand side. Your demand side is actually active now. Why? Because you know about this product, and now you can make the informed decision whether to buy or not to buy this mutual fund. So this actually helps to create the demand, and that's why always remember financial literacy, this actually creates the demand. Okay, whereas financial inclusion, this actually provides the supply. Okay, so financial inclusion, in which bank are taking deliberate step to provide you the products which you are demanding in the economy. Financial literacy awakens your supply side. Financial inclusion, it actually fulfilling your demand by providing the supply of the product. Okay, so this is financial literacy and this is financial inclusion. Next, now see, this is very important. Ultra small branches, so these are the step of financial inclusion. These are the step of financial inclusion. So bank actually permitted to establish some outlet which is known as ultra small branches, which are simple brick and mortar structure. And here, from here, business correspondents are actually working. Business correspondents are actually working. It means that they just overlook the base branch. Okay, they are actually the extended arms of the bank actually provide the services to the unreached people with the help of this business correspondent. So they actually operate from a small branch, which is simple brick and mortar structure, provide the financial inclusion, right? Next, payment banks. Payment banks, another way of including more and more people with the banking system. Now, payment banks is what? Actually, payment bank is providing you small saving accounts. Okay. Second, they actually help in the payment and remittance facilities, especially to the migrant labor work. Now, what are the scopes of the payment bank? Payment bank actually help in connecting the migrant workers and unorganized sector to the payment system of the India. But they actually accept demand deposit also. But there is a limit that payment bank is allowed to accept the demand deposit up to a maximum of rupees 2 lakh per customer. Okay, they can issue ATM, debit cards, PPIs, etc. Internet banking services has been offered, payments and remittance services, distribution of simple products like mutual fund and insurance. This also can be done by the payment bank, and utility bills payment. Okay, so these are the scope of activities of the payment bank. Now, payment bank operate in remote areas, and this can be operatable with business correspondence and ATMs, right? And they should have at least 25% physical points in the rural centers. Done. This I have explained you. Now, REITs, important thing. REITs are the initiative of the Reserve Bank of India for the financial literacy thing. Okay, so REITs, Ministry of Rural Development. Okay, these are actually to provide a dedicated infrastructure in each district for upgrading rural youth at the entrepreneur development. They are managed by the banks with the active cooperation of Government of India, state government. These initiatives, these are based on Rural Development and Self-Employment Training Institute of 1962. And these are the purpose of the REITs. For example, they actually provide you training to be on the demand driven. They actually helps you in upgrading your skill. They actually helps you in developing your entrepreneur skills. They actually help you in providing your employment, etc. So these are RSETI. Okay, so these are the initiative of RBI. These work by the active collaboration of bank with Government of India and state government, right? So these are the Rural Self-Employment Training Institute. Done. Now, next thing. Any doubt till here? Any doubt? Ultra small branches, the people working are like agent. Yes, they are like business correspondent. Business correspondent are the extended arms of the banking. Banking just provide the banking services to the unreached people with the help of this business correspondent. Okay, any doubt? So if you have any doubt, please ask your doubt, and if you no doubt, just please give a thumbs up. Done. Everyone, guys, kindly please give a thumbs up here. All thing is clear? Okay, done. Now, there is customer service guideline unit 17. Okay, customer service guideline. First of all, if we talk about the customer service guideline, we should be aware of the ATM operations. How many free ATM operations should be given? So customers are allowed to have a 5 free transactions, which can be financial and non-financial, every month from their bank account. Okay, they are also eligible for a free transaction, and that free transactions which are 3 in the metro centers and 5 in the non-metro centers. Okay, transaction in the ATM, invalidation is compulsory for every successful transaction. Now, what are the process of lodging the complaints of ATM? Okay, so first of all, you should have a telephone number to be displayed or to of the ATM on the ATM through where the customer can lodge a complaint. Okay, there should be a uniform template that can be prescribed by RBI for lodging the complaints relating to the ATM transaction. This is very important. How many free transaction? This is uh, often asked. Okay, बहुत बार पूछा गया ये. How many free transactions? Next, if we talk about the ATM operations penalty, very important. See, this I will be giving you question on this. Okay, why I'm telling you? You have to remember. Okay, so schemes, first of all, if there is cash out at any ATM and it is more than 10 hours in a month. So if any ATM is cash out and this is more than 10 hours in a month, they attract a penalty of rupees 10,000 per ATM. Very important. Okay, so you have to remember this. Next, security is an issue. So limit liability of the customer, very important point of this chapter. See, in some cases the customer is entitled to have a zero liability. And what are these cases? So if there is any fraud transaction, you have any credit card, if you have any fraud transaction, what is the liability of the customer? So in some cases there is a zero liability of the customer, and in which cases, first of all, if there is contributory fraud, negligence, deficiency on the part of the bank, if bank has done something negligible on their behalf, and if due to which you have some loss, you have zero liability. If there is any fraud in your credit card, you have zero liability because the negligence is on the behalf of the bank, right? Okay, and if there is any third party breach and there is no deficiency of services by your side, you haven't shared your detail with anyone, you haven't shared your ATM with anyone, but you have done a transaction using a website which is actually compromised, that website is compromised, there is a third party breach. Okay, and due to which you have some fraud transaction in your credit card, now in this case you have zero liability. Okay, so these are the two cases in which the customer is entitled to have a zero liability. But in some cases there is some liability of the customer, and that liability is actually the transaction amount or the prescribed amount, whichever is lower. Okay, now if everything is good by the bank side, there is no third party breach also. Okay, and even if now there is any transaction or any loss that has happened with your credit card, and you actually delays in notifying that transaction to the bank, I have received a notification in that your credit card is debited with rupees 50,000, but I haven't do the transaction. Okay, there is no deficiency on the part of bank, there is no deficiency, there is no third party compromise also, and I actually delay in reporting this transaction and I've reported it after 4 days. Now I have a liability. Okay, now that liability, either it can be the transaction amount or the prescribed amount, whichever is lower. Now what is the prescribed amount? The prescribed amount is this: if you are a holder of basic saving bank deposit account, the maximum liability is 5,000. So either your transaction amount or 5,000, whichever is lower is your liability. Saving bank account, if your credit card limit is up to 5 lakh, okay, in this case your maximum liability is 10,000. Okay, so either the transaction amount or this 10,000, whichever is lower. Okay, now if you have a credit card limit which is above 5 lakh, now your maximum liability is 25,000, either the transaction amount or the you can say maximum liability, that is 25,000, whichever is lower. Okay. Okay, so this is a very, very important part of all of you. Very important part. You have to remember this. Okay. Okay. Next, Unit 19. That is duties and right of a banker and customer right. Rights of a banker. This you all know. Four rights of a banker. Just listen carefully. For BSBD account, cash credit is provided. Yes, it is provided. There is no exception applied in this case. Okay, it is provided. Okay, duties and right of a banker. So there are four duties and rights of a banker. Credit card, no. I don't think so कि BSBDA CC is allowed. Okay, four. Four rights of a banker. Banker's lien, right to set off, okay, right of appropriation, and right to charge interest. Okay, so these are the four rights of a banker that you all know. I have already described you. These are the four rights of a banker. Okay, now if we talk about the second thing, first of all, duty of secrecy and confidentiality. So bank has to maintain the secrecy of the customer, yes or no? Bank has to maintain secrecy of the customer. Okay, so the duty of non-disclosure, it is actually contractual and legal. It is not absolute. It means that in some cases, if the bank is disclosing the details of the customer, are they under some special circumstances, it is allowed. Okay, there is no breach of any privacy on the behalf of banker in this case. So in any case, so in these cases, for example, if the disclosure is compulsion under law, means the law has actually given you instruction to disclose certain detail of this customer, and you as a banker has disclosed it, you haven't done anything wrong, and that's why it is said that it is contractual, it is not absolute. For example, if it is the duty to disclose it to the public, if it is under the interest of the bank that requires disclosure, or the disclosure is made with express or implied authority by the customer itself, under all these circumstances, bank is allowed to disclose the detail of the customer. Okay, under all these circumstances, bank, it is allowed that you have to disclose the detail, you haven't done anything wrong. And because of these reasons, this non disclosure duty of the bank is contractual, it is not absolute. Okay, the next thing, this is important, BCSBI, Banking Code and Standard Board of India. So it was set up under the committee recommendation, and the committees was SS Tarapur committee, and it was actually set up under the line of UK. So whatever the codes and the standards of banking system that has been used in UK, that same is actually followed in India under BCSBI. Okay, it was registered under the Societies Registration Act, and it is also known as the watchdog of the consumer or the banking services. Means the consumer rights are actually protected by this Banking Code and Standard Board of India. Okay, but later, RBI has actually established this Customer Education and Protection Department, which is issued by Charter of Customer Right. Okay, this has been issued, and this actually replaced the BCSBI, Banking Standard Board of India. Okay, so BCSBI, now it has been replaced. It was set up by the SS Tarapur committee, right? It was set up under the line of UK. These are the important things you have to remember. Banking Code and Standard Board of India, right? Any doubt? Any doubt, guys? If any doubt, just please give, just ask your doubt, or please give a thumbs up, everyone. Everyone, guys. Done? No doubt till here? Okay, just please give me 2 minutes. Just please give me 2 minutes. Uh, um, okay, so let's start the next chapter, Unit 19, everyone. Yes, a very good result in IEIFS. आप सबका बहुत अच्छा रिजल्ट आया. Yes, Swaminathan and Upadhyay and Lekha and everyone, very good result. Okay, so can we start the next chapter? Okay, Unit 19. That is Grievances Readdressal, RBI Integrated Ombudsman Scheme 2021. See, in this, I have just covered this RBI Ombudsman Scheme 2021. The most important thing, RBI Ombudsman Scheme, because this is very important. All you need to learn about this scheme. Okay, this is very important. So let's start discussing this. First of all, if we talk about the grievances, RBI Ombudsman Scheme, integrated Ombudsman Scheme, because there was three schemes which was working earlier, and the three schemes were a Ombudsman Scheme for non-banking financial companies, 2018, the Ombudsman Scheme for Digital Transaction 2019, and there was Banking Ombudsman Scheme of RBI in 1995. Okay, so these were three schemes. 1995, there was 2018 scheme, and there was 2019 scheme. All these three schemes has been merged, and it has been integrated, and it has been converted into Reserve Bank of India Integrated Ombudsman Scheme 2021. Okay, so this was the background that how this scheme has been introduced. Next, organizational aspects of this scheme. First of all, appointment of ombudsman. RBI appoints its officer as the ombudsman, okay, under this scheme, and the appointment is maximum of 3 years at a. There is Central Receipt and Repository Center, Chandigarh. All the grievances of the customer related, any grievances of the customer that is related to any thing, these are actually received directly at Chandigarh. First of all, CRPC Chandigarh, all the complaints, these are received by the Chandigarh, right? Second, power and jurisdiction. Now RBI specifies the authority of each ombudsman. So there is, first of all, the appointment of ombudsman is done, and RBI appoints this ombudsman for a period of approximately 3 years. Okay, second, there are CRPC, Central Receipt and Repository Center, Chandigarh. All the things, these are all the complaints are received here. Okay, Power and jurisdiction. Now, RBI specifies the working authority of the ombudsman. The ombudsman has to handle all the complaints which are forwarded to them by the CRPC. Okay, so CRPC forward it to them and they have to handle this complaint. Okay, mode of satisfaction of complaint. Now, the ombudsman can have the resolution of the complaint either by agreement or by mediation or by conciliation. Okay, there can be any process. They can pass a judgment, they can have an agreement, they can have a mediation between the bank and agreed party. Okay, then procedure for filing the complaint. How you can file a complaint against any bank if you are not satisfied as a customer. I'm not satisfied with any services of the bank, for example. Now, how can I file a complaint to a CRPC? First of all, I should file a complaint to CRPC. All the information or all the things they are received by the CRPC. The mode, it can be online mode portal. Okay, there is a website which has been given. There is a electronic mode, email. Okay, that is given, and you can either send the courier also. Okay, so there can be a physical mode also for complaining. Right now, confidentiality. As an ombudsman, you have to maintain the privacy of the information, whatever is mentioned in that, right? So, confidentiality, this is very important. You have to maintain the confidentiality of whatever the information that has been written in the document or whatever the information that is revealed by the customer in the complaint. Okay, next, if we talk about the process of complaining. Now, what is the process of the complaining? First of all, CRPC. Main thing is CRPC. CRPC themselves can reject the complaint on any of the grounds. These are the grounds. When the complaints are not valid, okay, they actually, the complaints are not in the nature of complaint. The customer is actually seeking some guidance or the customer is actually want to have some suggestion. So these are not complaint, right? So CRPC reject this. Okay, second, the complaints which are not maintainable. Maintainable means which are not under the area of the working of the ombudsman. Now, if it is not under the working of the ombudsman, then it is rejected by CRPC. But the complaints which are valid also and maintainable also, then CRPC transferred this complaint to the respective ombudsman. Okay. Now, the concerned regulated entity on the receipt of complaint from CRPC is required to file with the concerned ombudsman its written response along with the copies, and that should be within 50 days. Okay, next, award by the ombudsman. Now, what are the awards by the ombudsman? How the award by the ombudsman is given? Okay, first of all, direction. The ombudsman can give any direction to the regulated entity. For example, any customer is aggrieved by the bank, the ombudsman can give any instruction to the bank that okay, you have to do this and this. Okay, or you as a ombudsman, you can just take or you just order that entity to pay some compensation to the customer. Okay, either you can just say or give order that okay, you do this and this to that customer, or you just compensate to that customer also. Okay, now compensation is actual amount can be there without any ceiling. If there is any consequential loss, okay, so consequential loss, it can be up to the extent of rupees 20 lakh. So the ombudsman has this authority that they can deal with the complaint and then refund the amount or compensate with a maximum cap of rupees 20 lakh. And if there is any some other loss, like you have the loss of time or you have some mental stress, for this the compensation is approximately rupees 1 lakh that has been offered by the RBI integrated ombudsman scheme. Okay, now if you have decided something as a ombudsman, you have decided something that okay, this should be the compensation, a copy of the award is to be sent to that complainant and the regulated entity. Okay, now the complainant should give a letter of acceptance for the award in full and final settlement within 30 days of receiving. Okay, So if you have received, as a customer, you have received some instruction and you are satisfied with that, you have to send a accepting offer of that award within 30 days. Okay. Now, if you fails to do so, the award will lapse. Okay. There is a appellate authority, which is also known as the executive director in charge of the RBI department administrating this scheme. An appeal can be made either of the parties against the award to made by the ombudsman. Now, if you are not satisfied with the ombudsman order, as a customer, you just think, नहीं मुझे तो ज्यादा मिलना चाहिए था, या फिर as a regulated entity you think that this is not right on the behalf of mine. So if you are not satisfied with the compensation and award, you have a chance to file an appeal against the award of the ombudsman to the appellate authority. Okay. And the appellate authority allows an additional period of not exceeding 30 days for this appeal if they think it is satisfied. Okay. Lastly, see what are the complaints that are rejected by the ombudsman. So there are different complaints that has been rejected by the ombudsman. If the ombudsman think that there is no deficiency of services, if the ombudsman think that the loss is beyond their power, if the complainant is actually without any requirement or due diligence is filing a complaint, there is no sufficient cause, there is no proper documentation, etc. So if these are all the thing, in all these cases the ombudsman can reject the complaint of the complainant. Okay. So this is RBI integrated ombudsman scheme 2021, very important. You have to remember the three schemes merge into one scheme. You have to remember the area of the operation of ombudsman. You have to remember this rejection of the complaint. You have to remember the time, that's a CRPC, appellate authority. Okay, so you have to remember each and every important point of the RBI integrated ombudsman scheme. This is very important for your examination. Okay, any doubt? What is the limit? It was 20 lakhs, right? Yes, 20 lakh. Yes, 20 lakh. Then, any doubt? Any doubt, guys? Just please ask if you have any doubt. If you have any doubt, kindly ask your doubt. And if no doubt, just please give a thumbs up, everyone, guys. Okay, done? Good. Now, let's start the unit 20. Okay, we are about to finish the module A. Okay, just be relaxed. Himmat mat harna, we will complete module A, don't worry, right? So module A, this is the Consumer Protection Act 2019, okay? So unit 20, Consumer Protection Act, consumer rights, okay? In very simple language, I have written the consumer right. The consumer right to be protected, right to be informed, right to be assured of the quality, right to be heard if there is any grievances, right to seek readdressal, okay? Right to be aware, right of the consumer affairs. First of all, these are the rights, these are the consumer rights. Next, if we talk about various consumer fora, so Consumer Protection Act has actually various different platforms to handle the consumer disputes, and these platforms are Consumer Protection Council, Central Consumer Protection Council, CCPA, the most important thing, Consumer Dispute Readdressal Commission, and Consumer Mediation Cell. Okay, now let's start with the CCPA. Very important. CCPA, which is also known as Central Authority. Okay, now CCPA consists of the Chief Commissioner. Okay, sorry, consists of a chief commissioner and other commissioners as per description. The headquarter of this central authority is in New Delhi. So these are the functions of CCPA: to promote and enforce the right of consumers, to protect or prevent the violation of consumer right, to prevent any unfair trade, to ensure that there should be no false or misleading advertisement, to ensure that there should be no false or misleading advertisement published. Okay, so these are the functions of CCPA. What are the powers of a central authority? Very important. So power, first of all, they have the power to conduct inquiry. They have the power to recall the goods. Recall the goods means if they think that it is not up to the mark, or if they think that this is not right for the consumer, they can recall the goods off. They have the power to discontinue the false advertisement also, and they have the power to search and seizure also. Okay, so if you have any go down on anything and there is any suspicious activity that is going on and the central authority just have the sense of that, they have the power to search and seize that product also. Right now, a person who fails to comply with the direction of the central authority, they are punished with a jail, and that jail can be extended up to 6 months, or there is a fine that can be extended up to rupees 20 lakhs, or both. Okay, any manufacturer or service provider who cause a false and misleading advertisement, they can be punished with a jail that is up to year, fine that is up to 10 year, and for fine up to 10 lakh, and for every subsequent offense there is a imprisonment of up to 5 year and the fine up to 50 lakhs. Very important thing. Okay, next, if we talk about the consumer readdressal dispute commission, consumer dispute readdressal commission, first of all, the authority, so they have the power to entertain the complaints of not exceeding 50 lakh rupees. Okay, so whatever the complaint, if the amount is not exceeding 50 lakh, then it is taken care by the district consumer readdressal commission. Very important, district consumer readdressal commission, the maximum amount is 50 lakh. Okay, next, they have a president, they have not less than two and not more than prescribed number of members. At least one president or one member should be a woman. Okay, a state consumer readdressal commission, the complaints where the value exceed 50 lakh and does not exceed 2 crore. So district, the value should be less than 50 lakh. If this is a state consumer readdressal commission, the value shouldn't be exceeding 2 crore. Okay, 50 lakhs and 2 crore. Okay, next, if this is a national consumer dispute readdressal, means they have more than what? More than 2 lakhs, sorry, 2 lakhs, 2 crore. If it is more than 2 crore, then it is taken care by the National Consumer Dispute Readdressal Commission. Okay, remember this. Next thing is complaint handling procedure. Every complaint filed by a or shall be accompanied by a fee as notified by the central government. No fee is prescribed if the goods value is up to rupees 5 lakh. So if your value or the amount which is involved in the complaint is not more than 5 lakh, there is no fee that is charged on that goods and services. Right? The district commission may admit the complaint of the proceeding and reject the same. Before rejecting the complaint, an opportunity to be heard is to be given. Okay, and it should be decided within 21 days from the date of filing. And if no decision is taken within the specified period, the complaint is deemed to be admitted here. Okay, again, a case study type question can be formed from this line. Next, okay, appeal against the order of the district and the state consumer. So if you are not satisfied, again, if you are not satisfied with the district order or the state order, then what to do? First of all, you can just file an appeal against them to the what? First of all, to appeal an order of the district and state commission, a person must deposit 50% of the required payment. First of all, you should have to submit the fees, that is 50% of the required payment. Okay. Second, appeal to the state commission. This can be done within 45 days. Appeal against a state commission. First of all, if you want to do appeal to the state commission, this is done within 45 days. And against the decision of the state government, state commission, it should be within 30 days. Appeal against the national commission order to the Supreme Court, this should be done within 30 days of receiving the order, right? So, if the order of the district, state, national commission are final, no appeal is made. Done. Okay, the mediation process, very simple. Now there is a mediation panel also in this Consumer Protection Act also. Now this mediation panel can have any person who is a retired judge of a Supreme Court, retired judge of High Court, retired member of a Consumer Commission, retired judicial officer with the experience of not less than 10 years, an advocate with a minimum experience of 10 years, okay, a person having at least experience of 5 years, and experts and professional with at least 15 years experience in this bureaucrat thing. So if you are any one of this, you can act as a mediator under mediation cell, which provide out of the court settlement between the aggrieved party and the regulated entity, right? So this is the complete chapter. Now, everyone, please just listen. This is it. Okay, now this is unit 21, right to information act, and I have given the notes. Okay, there is 4 to 5 pages note which is very important for all of you. You just have to read it out. Please read it out this chapter, and if you find any doubt, kindly come to tomorrow's session and ask your doubt. Okay, rest all the important things of module A is finished by me, right? So module A is completed. There are more than 180, approximately 180 pages, okay, of this module A, which I have covered, okay, and this will be given as a PDF to you. You have to read bus this much. Don't go more than this much. Why? Because else you will be confused in the last 4 days. And I will going to have a marathon of these module A in tomorrow's morning session. So tomorrow morning 8 a.m. please come to the session, because I will going to have a question based on complete module A. So whatever I have left, okay, whatever is less important, this is covered in question. Okay, and what is very important, this is also covered in question. Question answer session is, by the way, very important to all of you, right? Done. Okay, so thank you so much everyone for joining this session. Swaminathan and Lekha and Kavita and Rose and Chaitanya and Upadhyay and everyone. Thank you so much, guys. Thank you so much, guys, for joining this session. And I hope that you have all enjoyed this session. Okay, and please, your ratings matters a lot, and that's why, please, before going and ending this class, I request all of you guys to provide rating and feedbacks to the session. And in the YouTube, kindly please like and share the video to the maximum you can. Everyone, before going, just please drop a feedback and rating to the session. Okay. Else everything is given 21 unit. I have given complete the notes. Just read out that note. Okay. Thank you so much, guys. Thank you, Kavita. Thank you, everyone. Bye bye. Take care. Thank you. Take care. Bye bye, everyone. Bye, guys.